Yo, you like that thumbnail?
I do.
You like that thumbnail?
Yeah.
Yeah. I like that. Expressions.
We've got new thumbnails.
New thumbnails, everyone. Next up is getting his face on there. That'll be next week. What's up, everyone? Welcome to Benzinga Live. Spencer, there's Aaron. And did Amazon save us all? Is that what happened here?
Well, it did, and then now not. It's like even Amazon can't save us because the SPY is still down after a great jobs report. So that's
yeah, but it was a bad news, good news. It was a good news is bad news thing.
Yes.
We can talk about that. We'll talk about that. All right. Big show today. What's up, everyone in chat? I see you all. We got a bunch of guests coming on. First up at 12. Who's our first guest? At Brian Feroldi is our first guest at noon today. He's an Aaron Bree contact.
He's got a book coming out.
That's a segment that we're both very excited for. We got Jesse Kaylor, who is going to be wearing his Cincinnati Bengals gear at 12:30. We got Jeff Kamys at 1 o'clock. New guest. He is going to talk to us about sports betting, which is the industry that he is most active in. But he's also the chief investment officer of a fund. And in between all that, we'll do trivia. We'll do name that chart. We'll do crypto update. We'll do some questions from the chat. We'll just hang out. It's Friday. That's what we do. Oh, I forgot about our last guest, Rick Decosta. Oh, I'm so sorry, Rick. Rick Decosta.
You said Jesse Kaylor too, right?
I said Jesse. 1:30 today. Rick Decosta, the president of Fit Traders, will be on with us. We're going to talk like trading, but also like trading psychology with Rick at 1:30 Eastern time today. So you know what to do. Hit that like button. Yo, roll that intro. Where's my intro at? Roll it. Roll it. This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojasik from Trend Spider. We have a breaking news. Yep, you heard that. What's up, RJ? Talk to me, Goose, Proton, Shelly, Easy Mike, Mark, Miss Whitehorse, my dad. My dad's in the chat. What's up, my dad? My dad doesn't talk to me anymore.
Damn.
I'm just kidding. Just kidding. What's up, Dad? How we doing? All right. Where do you want to start here, Aaron? You want to start with the Amazon thing? Or you want to start with this Take-Two stuff?
Or jobs report.
Or whatever trades you got overnight.
Okay, we can start with that.
Let's start with Aaron's trades. Aaron's got some trades. Trades on trades.
Well, trade complete pretty much. I do have one. So yesterday we talked about the Clorox puts.
Yeah.
I went out and I went out and got those puts. Let me pull this up on my
yeah, recall that Aaron was bearish Clorox because he looked at their slowing, the fact that their revenue was slowing really since COVID. Since they got the COVID boost.
So this contract, a 162 put that expires today, the stock currently trading at 141.24. I picked this up for $245 yesterday. It's currently worth more than $2,100 for a 767% return.
I've got some breaking news here, Aaron. The ski trip is back on.
True. Yep, it is back on. 100%. And for I should sell this right now, but I had multiple other contracts that I sold. I just kind of kept one to see what would happen. And honestly, I should have held the others because Clorox opened at like 146 and then came all the way down to 140. So had I held on a little bit longer, would have been some better returns. But hey, can't go broke taking profits.
Aaron and I talked about me buying some puts on Pinterest. On Pinterest and or Snapchat. And man, am I glad I didn't do that. I would have been roasted this morning. Oh boy!
Which I also did. I had a put spread on Amazon. We talked about playing Amazon.
Yeah.
I wanted to play it one way or the other, and I was more like upset last night that I missed out on Amazon. I didn't really think about the Clorox thing as much.
Yeah.
And then I realized, like, kind of this morning, I was like, shoot, if Clorox opens at like 143, I have all these puts at like 157. I was like, I have like 5 contracts, and the intrinsic value of each one will be more than $1,000. And I didn't even think about it. Like I was more like beating myself up over the Amazon trade.
Yeah, man.
So it was a nice little, nice surprise this morning.
All right. Aaron is hot. Listen, when you're hot, you're hot. When you're not, you're not. He's hot right now.
Yeah.
Can't argue with the results.
As for any trades I'm looking at right now, I've been looking at a few, but I'm not getting into any right now. I do like
Well, Take-Two had some news here.
yeah, we should talk about this.
Yeah, so I'm going to go to the headline in Benzinga Pro. Where else would I find it, frankly? Take-Two, it was actually a tweet this morning from, was it from Rockstar? Yeah, it was from Rockstar Games, which Take-Two owns. And they confirmed, drumroll please, a new GTA, a new Grand Theft Auto installment is coming soon. In progress. GTA, I believe that's the highest selling game franchise ever, I think. It's either that or Call of Duty.
Halo.
No, it's more than Halo, I think. I think last time I checked GTA, it was either GTA or Call of Duty. One of those two. But GTA 6 is coming. When? I don't know. Soon? Probably not. But at some point it's coming. Will it be only available in the metaverse? Who knows?
Dude, that is one game that'll be crazy once everything's VR.
Dude, can you even imagine? Oh man,
that'll be problematic.
Anyway, wait? Where's my Take-Two chart? Let's get it up on the screen right now. This is not Take-Two. This is Clorox. This is Clorox. Get that off the screen. Take-Two, 15-minute chart. Bada bing, bada boom. There you go. Up 5.38% today. Almost $9. Solely because of Grand Theft Auto.
Yeah, I mean,
this is the power of GTA.
But Take-Two making another Grand Theft Auto was always a given, and I mean, it was.
Yeah, I know.
If anything, it's late, so it's like.
So you're saying the market is dumb?
No.
You can say that. I won't argue with it.
I'm not saying it's dumb. It's just not always perfectly corrected, I guess.
I mean, there's a difference between thinking, assuming a game is coming and then knowing it's coming. But anyway, Take-Two, we now know their cash cow is coming back for another round. So anyway, that Take-Two chart, man, stocks are funny. We're almost back. So it had a couple of days of weakness right ahead of the announced acquisition of Zynga, but we're almost. Let's see, where do we close the year at? We closed 2021 at 177. We're only $6 off that. It's been a very nice almost month, almost 30 days for Take-Two here.
I do think even with this news aside, Take-Two stock was already kind of undervalued a little bit. So I don't think, this is like the short-term ceiling for Take-Two by any means.
We will be covering this more, I suspect, in the coming weeks and months. We have there's a group within Benzinga that is a group. We have a group of pretty diehard gamers. I know Aaron Thomas. I know a couple guys on our news desk are hardcore gamers. I imagine they will want to talk about this. So we'll be talking about this development more as we know more. But while we're on Take-Two, let's pull up this ATVI chart. Someone tell me why we shouldn't just buy. Can you pull up an options chain real fast?
Of what?
Of Activision.
Yep.
What kind of strikes are available right now on Activision?
Depends on the expiration date.
Can I go out 8 months?
The problem is it's not going to be very volatile because look at the 1 month chart after the deal is announced. It just is.
All right, so there's
flat.
a time decay. So screw the options. Why shouldn't I just buy Activision right now? Why shouldn't we all just buy Activision right now?
What was the buyout price? 85?
95.
Oh, 95?
$95.
I don't know. I mean, it's a question of does the deal go through?
Why wouldn't the deal go through?
I don't know. I have no clue. I don't think there's an antitrust issue. I mean, it was someone would have to one party of the deal would have to back out. I don't even know if that's possible.
Yeah, it's always possible. Okay,
So-
don't place options close to the midterm elections. Okay, that's a good rule of thumb.
Actually, I played options on some healthcare stocks during Super Tuesday of the 2020 elections when Biden swept, like, for a while it looked like Bernie Sanders was going to be the Democratic nominee, and then Biden swept on Super Tuesday.
And they all ripped?
Yeah, like United Healthcare was up 10% the next day.
Yeah, that's
and
funny.
I had I had calls on them, so you can play, I guess, some political events like that.
Okay, should we all just buy some ATVI? Yeah, I guess on the options front, because you got to go out at least a year, because they themselves. Well, no, you don't have to go out a year, because presumably the deal would be confirmed before it closes. They said it wouldn't close until next year, but you would think before that we would have at least some.
Wow, we haven't seen Bitcoin in the 40,000 since January 20th.
Are you saying that BTFD works?
I mean, it hasn't worked if you bought any of these dips, but who knows?
I bought some
Bitcoin.
Some Bitcoin. I buy Bitcoin and ETH every month now, once a month. I don't. That's not me making a market call. That's me just dollar cost averaging into cryptocurrency.
I'm just gonna sell this last put.
Do it.
And then if we find anything interesting, who knows? Maybe we can deploy some more capital.
All right, so I'm trying to buy some ATVI, I think, in like my Fidelity account, just for like, come on, we're talking $16 here.
Yeah,
it's not nothing.
Let's do it.
All right, that's on my list. I'm gonna open up the Fidelity account right now. Let's go. Let's go over here. I'm gonna get some Activision. I have not thought this through at all. Someone tell me why this is a bad idea right now before I do it.
To buy Activision?
Yeah.
I don't know if there's anything to like why the deal would fall through. Let me look it up real quick.
I'm logging in.
Oh, hell yeah, Daniel.
Nice job. Nice job.
How much tendies did you get?
Tendies? I haven't heard that. I haven't heard anyone say the word tendies in like out loud. That's not a word that people say. It's a word you type.
I just did.
You don't say that word. You type that word. Okay. Action. I want to buy the stock. Let's buy. It's going to be a little bit of a position here. Nothing super crazy.
Wait. Okay. Microsoft chief hails $75 billion deal. Sounds like that's good news. Microsoft CEO doesn't think Activision deal will be blocked.
Voodoo, tell me now before I've got my finger on the buy button.
Microsoft's Activision deal will be subject to FTC review.
Yeah.
Obviously.
Yeah, of course it will. Buy Unity. I'm not trying to make a call.
Microsoft says it'll still be a smaller game company than Sony after Activision deal. I love that move. They're like, hey, we don't have an antitrust issue. Look over there. They're bigger than us.
Look over there. They're bigger.
Yeah.
All right. Small position, 20 shares. Done.
Was this in your mom's parents' account?
No comment.
Okay.
No comment.
Fair.
Activision shares acquired.
Fair.
Cost basis. What's my cost basis there? 79.23. Right at the market right now. That's me. All right, got that done. Someone remind me to check on this in a week, just so I don't forget about this.
No, the Activision deal was in 2022. I was gonna say that would have been a funny stock to pick as your 2022 stock of the year.
Yeah.
If you just like thought the deal was going to go through and it's an easy, what is that? 20? It's 20%, more than 20%, or a little less than 20%.
Yeah. Okay. Let's go back. We haven't talked about Amazon yet today. Let's do Amazon. That report last night was good, but confusing. So here, let's go to a news feed here in Amazon. Just want to scroll a little bit to last night. All right. So a few things I want to point out. Number one, if you're trading earnings, like in the after-hours session, the numbers can be very confusing. Case in point last night. The number that was in the press release for Amazon for their EPS was $27.75. That's a big old number.
But
That's ridiculous. $27 of earnings per share. The only companies that have that are companies that have like no like Booking, which has like no like super small float, right? And a lot of earnings. The truer number was the adjusted EPS of $5.80. Now that's also good because the estimate was now in like the 367 range, so it was still a good earnings print. But everyone was citing this $27 earnings per share number, and like, yes, that's real, but it's unadjusted, right? We have to adjust these things for someone. For example, adjust for selling your stake in a EV company like Rivian, which Amazon did. Amazon got like half their profits last quarter from the Rivian stake. So again, asterisks. We have to take the asterisks out. That being said, it was still a good quarter. AWS, which is the engine here, revenue came in above estimates. Revenue came in, I believe, at $17.8 billion when they were calling for $17.3 billion. Bottom line is AWS is growing at a 40% clip every single quarter, and you can't stop it. It was a good report, especially in the context of the Facebook report from the day before. And I know they're not the same business, but the market treats them similar because they're mega cap tech stocks.
Well, and Amazon, also kind of unlifted its lid on its advertising business, which is similar to Facebook's.
That's true.
Model.
Tell us more.
So basically, Amazon has advertising revenue through its website, and they've always been kind of more on the hush-hush about its numbers on how much they make strictly from advertising. And then in last night's report, for the first time, they categorized it separately so that you could see exactly how much money they've, I believe it was $28 billion or something last year. And someone said it was in line with the total amount of ad sales throughout all newspapers in the country. Just on Amazon.
I mean, I believe it.
Yeah. Anyway, that part is similar to Facebook, and they exceeded expectations in the ad front where Facebook failed. So that was another thing investors liked about the Amazon front. But end of the day, yeah, I mean, at one point it was up, 16, 17% after hours? Now it's only up 10?
Yeah, so you really just have to keep an eye on two numbers, right? Your pre-market high, your pre-market low. And do you hold them? That's the question, right? So in Amazon's case, like, yeah, we're up huge today. What are we up today? I'm not looking at we're up 13%, right? We're significantly off the high last night. Now that was kind of dumb. We're getting to, how high did we get? 3,300. That was kind of dumb. This is not the kind of market that rewards chasers. If you're chasing stocks up like that, you very seldom get rewarded. So let's just see how it goes the rest of the day. Really, in the last half hour is what I want to know. Do we leak into the close or do we just hold steady? If we hold steady, then all right. That gives us a leg to stand on here. But the mood is still tenuous. Facebook was alarming. Not just the report, but the stock move. They basically lost an entire Costco worth in their market cap.
It was the largest slide in market cap in one day.
Yeah,
in stock, $200 billion in one day.
Now that also speaks to the fact that these companies are just so freaking large.
Yeah,
there's never been companies worth this much in the history of humanity. They're just so big.
But what I would say is that with the earnings we saw last night between Snapchat and Pinterest, it kind of pointed at that maybe Meta's problems are just Facebook's problems.
Well, I'm glad you brought those reports up, because Snapchat's report was good. I didn't see that coming. Apparently, Snapchat has been able to deal with Apple's privacy changes better than Facebook has.
I think Zuckerberg's just kind of leaning on that as an excuse at this point. I mean, their users are declining. That's the bottom line, which you can't have as a...
Well, for a long time, the growth came from Instagram, and it came from WhatsApp.
So
And
you're saying on Facebook's website it had been declining for a while?
I mean, that's why they bought Instagram, right? I mean, it had to come from somewhere. There's nothing wrong with buying growth,
No,
right?
no. Those
But
were great moves. WhatsApp is huge.
WhatsApp
internationally.
is a literal necessity item. Like, we can live without Facebook and Instagram and TikTok. People can't live without WhatsApp.
Yeah.
People literally rely on that to talk to their loved ones. So, hey, I just got word that President Biden is started speaking. If you'd rather watch him, first off, why?
Come on, yeah.
Why would you do that? But we are streaming that on our channel right now. Anyway, so okay, but what I was saying though was the Snapchat report was cool. They're profitable for the first time, net income. The Pinterest report was not that good, honestly. Their user growth is also slowing. It just wasn't as bad as Facebook's. Facebook was like disaster territory.
That's what I said yesterday when we were talking about Snapchat. I said the bar's been set so low.
Look at this Pinterest chart. This is what I was just saying. Pre-market highs, pre-market lows. We broke through the pre-market low right off the bat. Or not right off the bat, but what was the pre-market low? 25.28. What's the low of the day? Yeah, 25.14. We broke that. This is ugly. This is ugly. Yeah, we're up 5% today. Big whoop.
Should we talk about Clorox real quick? I know we joked about it yesterday. No one cares about Clorox, but I mean,
yeah,
Clorox is like a consumer staple. You don't see this often in a stock like Clorox down 14%.
Positive spin zone.
Yeah.
This is a defensive name. Okay, defensive name. In an inflationary environment, people are still going to be buying Clorox products. They need to, right? So this is bad today, obviously. Don't mistake Clorox. Like, don't lump Clorox in with Meta. Don't lump Clorox in with, like, I don't know, Roblox or Square or PayPal. Different company, different business.
Yeah, I mean, for context, we're now below pre-COVID levels.
Oh, are we? Let's zoom out on the weekly.
Yeah.
Oh, shoot. Holy crap, we are.
I agree, though. I mean, this stock, it's not going to be... I mean, hopefully it's not going to continue dropping that.
Clorox went from, let's just call it, we'll say February 2020, and it went from, we'll just say 160 to 240, just about. All right. And it went just now from not just now, but from 160 to 240 in 5 months, 6 months, 6 months, in 6 months. And over the course of the last year and a half, we've given all of it back. Wow. That's dramatic.
Yeah, let us know in the chat if y'all have any trade ideas out there. Thank you, Voodoo. Peso saying Clorox is a buy. Yeah, I mean, Jay Rice is right. If you're a defensive name and you miss, you're gonna get hit. Your job is to not miss. Your job is to meet those targets.
Well, everyone's job is to meet the targets. Frankly, a company like Clorox should be given more slack
than a growth company.
Because everyone knows you're not buying Clorox for their growth. No one buys Clorox because it's a high growth company.
Yeah, but I think to see the variation in Clorox's revenue, I think like the same quarter last year, it was like double or triple the revenue they reported yesterday. So to see like a significant, like a 50% drop off in revenue or something that drastic in a defensive name is going to be seen as, just something that can't happen with those names.
Yeah. All right, what else we got here? Sup, born to be free. How we doing? Before we do or bring on our first guest, let's just do a crypto update. I did one just now on All Access, but let's do another one real fast.
Yeah, I heard that one didn't work.
It didn't work because of a virtual green screen, and I forgot we had that up. So I apologize for the. Actually, no, I don't apologize. I don't apologize. I'm not sorry.
Yeah, it's 2020. We're not doing that anymore.
It's 2020. I'm not doing apologizing. Let's do it. All right, the heat map on the screen. Come on, heat map. Come on, heat map. What does the heat map say? Oh, yeah. You love to see that, don't you? Whoop, there it is. You love to see that. Bitcoin, ETH, everything, green, no change. Means we're all going skiing.
Woo! Let's do it.
We're going skiing. We're going skiing. I don't know. We're going to Vail. We're going to Vail. Everyone, road trip. Aaron Breeze driving. Let's go. The retirement is back on, everyone. Retirement was off for a few weeks there. We're back on.
True.
The fire.
That's the fun of options trading. You go from hero to zero to hero to zero, all in the span of 2 weeks.
This is off topic. Does anyone have an opinion on Clark Howard? Does anyone even know who that is? He's a personal finance guy. My parents are like obsessed with Clark Howard.
Clark Howard.
Yeah, they send me like Clark Howard links like all the time.
He's not one of those guys that's like, who was it that said?
That was Dave. You're thinking of Dave. What's his name? The debt guy. Right.
I'm thinking of the guy that said like you should not step foot in a restaurant.
Dave Ramsey. It sounds like a Dave Ramsey.
Yeah,
thing.
I think it was Ramsey. He said like you can't step foot in a restaurant until you're 100% out of debt. It's like people with credit cards.
Dave Ramsey's kind of.
Is Clark Howard like that?
No, he's not like that. Easy Mike says he's honest. My parents love Clark Howard. Voodoo. My cost basis on the ATVI was $79.23. Okay. Hey, crypto update. Here's the heat map. If you want some free Bitcoin, it's really not hard to get. All you have to do is go to the Voyager app. You download the Voyager app if you don't have it already. You open an account using the offer code ZING, Z-I-N-G. You fund your account with $100. You make a trade, and they'll send you $50 in Bitcoin for free. And we all know free stuff is better than not free stuff. Check it out. My mom just sent me a tip on how to travel for cheap. Clark Howard's #1 free tip.
Ooh,
Anyway.
that actually sounds.
Do you want me to read it to you right now?
Yeah, give me some.
All right. Oh, Easy Mike says Clark sucks. All right.
But he said he's honest, right?
My #1 rule of travel is buy the deal first and figure out why you want to go there. What? Oh, get the deal and then figure out why you want to go. Don't figure out why you want to go.
That's a terrible idea. Then you're just taking
the
trips because of a deal that you weren't going to take in the first place. That's the worst. That's the worst personal finance advice I've ever heard.
Oh man, get the deal, then justify it to yourself later on. That's literally what it says. I'm reading it from the thing. All right. Anyway, enough of that. Let's go full screen here. We got our first guest here, Aaron. You want to intro us?
Yeah, so Brian Feroldi, you guys might know him on Twitter. He's got about 260,000 followers on Twitter.
Oh, that's only like 260,000 more than me.
Well, is that you wanting to talk about your tweet?
No, keep going.
Okay.
No.
Anyway, Brian's got a book coming. It's out now, or you can pre-order it now. Why does the stock market go up? So we're excited to talk to Brian about his book, some other things going on in the markets right now. So without further ado, let's go ahead and give Brian the special intro and bring him on.
Wow.
Brian, how's it going?
I love that graphic introduction. It was fantastic.
Thank you. Welcome to Benzinga Live. Happy Friday. Thank you for taking time out of your day to join us.
Thank you for having me. It's a pleasure to be on.
Yeah, how's it going?
It is going great, although I woke up this morning to realize that my kids didn't have school because it's raining out. That's a first for me. Yeah.
What?
It's going to turn to ice later. They didn't want to put the kids in school. So, yeah, just throwing that out there that I have some kids running around in the background.
No problem.
A rain day? Kids these days don't
It's
even know.
new to me, too. This is new to me, too.
We'll keep it PG. What part of the country are you in?
Rhode Island,
I should say. Rhode Island? Okay.
Very beautiful state. Brian, why does the stock market go up?
Great question. That's
Thanks.
a question that honestly perplexed me for many years, and this included after I was buying and selling stocks. I've personally been investing since 2004, and back in those days, the only way that you could really get information about investing or learn was by reading books. So I read all the classic books, and they're awesome, right? Books by Peter Lynch, books about Warren Buffett, books by Jeremy Siegel, Jack Bogle, etc. They're all awesome. And all of them largely say the same thing, right? Buy the stock market. It's the greatest wealth creation machine of all time. Hold for long periods of time, and the stock market continually goes up. And the data clearly shows that. If you buy and held the stock market over long periods of time, you average about a 10% return. But the tricky thing is, I was like, that makes no sense. Makes no sense to me that there's this thing that defies gravity, right? I've always been taught what goes up must come down. And that happens on occasion, right? I don't know about you guys. I've seen a whole bunch of stocks that I own come down pretty hard over the last year.
Nope. Never had that.
Never had that experience?
Never.
Only pick winners. No, I'm just kidding.
Yeah, only own winners. It's so easy. Investing's easy.
It's so easy.
Just buy the ones that go up.
Yeah, only pick ones that go up and not the ones that go down.
But the market in general continually goes up, continually makes new highs, and that was a question that just perplexed me. And the good news is it's not hard to understand why this happens once you understand the kind of growth drivers in place. And then once you understand those growth drivers, once I understood those growth drivers, I could invest with a heck of a lot more confidence and could invest during inevitable downturns that come your way. So I didn't write the book because I thought there was a need for another investing book. There's thousands of great books out there, but I wrote it to essentially explain to myself 15 years ago everything that I wanted to know about investing.
That's awesome. I love books like that where you had a question yourself and you went out and wanted to get the answer. So you write a book while doing that, while searching for the answer. And I got to ask, so we had Amazon's earnings last night. How much of Amazon's revenue was from pre-orders of this book?
Obviously, it was the lion's share of their growth. I think that's fair to say. Amazon has been one of my favorite companies to buy and hold, and I've been a shareholder since 2010. And boy, there are a lot of lessons to learn about investing by looking at what this company has done over long periods of time. And I don't know about you guys, I'm a bit surprised by the market's reaction today. I looked through the earnings and it seemed like, there's positive and negatives, but given the market conditions we were in, I was pleasantly surprised to see shares going higher today. If you would have given me the report and said, predict what was going to happen, I would have said pain tomorrow.
I'm with you, because while the EPS and stuff was great, you take out the Rivian profits and it wasn't all that great.
I was on record as saying, I think my exact words were, there was nothing that Snapchat or Pinterest could say that would make the stock go up. And hey, I was wrong.
Yeah. Earnings are tough. Tough.
This is why I'm a firm believer. You could give me the earnings reports ahead of time and be like, predict what's going to happen, and I would have a 50-50 accuracy rate.
Oh my, we should do that. That's a good segment. Go back on old reports. I'll tell you what the report was, and you have to guess what the stock did the next day.
Okay, I'm writing this down because we're going to do that. That's a good segment idea.
Okay, so is Amazon the best place for people to go out and pre-order your book, or are there other places, or primarily on Amazon?
Yeah, it's available on all the major channels. Amazon has a dominant market share, so that's the one that's the easiest for most people, especially if they're Prime members and already have their credit card there. Which, by the way, I think that's a reason why. I'm guessing that's a major reason why shares are popping today. If you read in the report, they're raising the price of Prime by $20 per year. Pricing power. Anyone? I don't know about you guys, but I'm certainly not going to be canceling Prime because the price is going up, 15% ish. So I'm guessing that's what investors are reacting to today.
Yeah, I'm in the minority of people that I actually do cancel my Prime account and utilize the free month you get, but most people don't do that. All right, Brian, I would love to get what is your personal investing philosophy? Do you in your own portfolio, are you an index fund guy, or do you own everything? How do you approach it with your own money?
Yeah, I'm a huge believer in index funds. I think they are the right choice for, I'm going to say 98% of the population, right? The simple formula for getting wealthy in the stock market eventually is dollar cost averaging plus index funds plus time, right? If you can do that over a period of decades or a period of your working career, the odds of you having a really, really big smile on your face at the end are extraordinarily high. But I also believe if you're in that weird 1% to 2% of the population that actually enjoys finance, actually enjoys research, actually enjoys learning about business, and enjoys investing in the stock market, that you are a good candidate for picking individual stocks. So my personal strategy is I have all of my retirement funds, everything like that, are just automated in index funds. Never have to think about them. Just continually go. And then any extra capital that I invest in top of that is all invested in individual stocks. But my broad strategy is I'm a bottoms up stock picker. So I love scouring the markets for business ideas that intrigue me. And my general style is to buy and hold a bunch of great businesses. And great business is according to a checklist that I created for myself. And the companies that best fulfill the needs of that checklist are ones that I buy, and I tend to buy and hold them for as long as they remain good companies. So it's long-term buy and hold great businesses, and with a dose of extreme amounts of patience.
What are some of the things on that checklist?
Yeah, so I recommend this exercise to everybody that's is invested in picking individual stocks. Step one, write down on a piece of paper or an Excel spreadsheet all of the attributes that you want to see in an investment. Right? What are the attributes that you like to see? So on my checklist, it's things like I want a great balance sheet, I want high revenue growth, I want strong margins, I want positive free cash flow, I want a wide moat, I want a founder-led management team, I want signs of optionality, signs of operating leverage, I want a stock that's beating the market, I want a stock that regularly exceeds Wall Street's estimates, I want a whole bunch of things, right? So I made a list of all the things that I'm looking for, and then simultaneously I made another list. What are the things I hate seeing in a business? I don't like customer concentration. I don't like geopolitical risk. I don't like high amounts of stock-based compensation. I don't like it when a company is dependent on an outside market price for that business to do well. An example, if you're an energy company, if you're in the oil business, doesn't matter how good of a business you are, the price of oil determines how good your results are. If you're in the banking business, doesn't matter how good of a bank you are, the price of what interest rates are is going to determine how well you do over a period of time. Those are outside forces that the business itself has no control over. I don't like investing in companies like that. So whenever I come across a company, I run it through this checklist and I say, all right, how many of the positive boxes does this check for me? How many of the negative boxes does it check for me? And then I have a simple scoring system that produces a number. And the final output is like, how aligned is this particular investment with my particular style? And then I just buy the ones that score the best.
When you say you're buying and hold, how long typically are we talking about?
I'm a firm believer in the Buffett forever quote, although that gets misquoted all the time. His quote is actually, when we own outstanding businesses with outstanding managements, our preferred holding period is forever. I feel the same way. I'm happy to hold a stock for many years, and my top holdings today aren't stocks that I put the most capital into. They're just stocks that have gone up the most because they're outstanding businesses. So my longest holding is Google, which I bought in 2009. So that's 13 years now. And I see no reasons to be a seller of that stock anytime soon. Conversely, I've bought companies and then have bailed on those companies in less than a year if I was like, well, I'm wrong. The business is clearly deteriorating, and my assessment of the business is wrong.
That's a sign of a good investor, someone who knows when to cut their losses. So if you just found, say, $10,000 on the ground right now, would you add that to positions that you have existing, or would you go out and look for some new holdings to potentially invest in?
So whenever I'm investing capital, I look through my watch list and my portfolio, and it tracks a few key things. But essentially, what I'm looking to buy at any given time is a combination of three things. One, a business quality. The higher the quality of the business, the better. And by high quality, I mean meets my checklist criteria. 2, long-term potential. So I'm far more interested in buying a $3 billion business today that I think could become a $30 billion business than I would be investing in, say, Facebook today, which is an $800 billion, or whatever the market cap is, $800 billion. By the way, I'm a shareholder of Facebook, but for Facebook to double, it's got to add on another 800 billion in market cap, right? The mega cap multiplier obstacle. I have a bias towards adding to smaller companies that I think can 10x. And then number 3 is valuation. So whatever stocks are trading at the most attractive valuation at any given time. So it's a combination of business quality, long-term potential, and valuation.
We're going to talk psychology a little bit later on in the show, but I'd be curious to get your perspective, Brian. You know, having been an owner of Google for, you said, 13 years now, do you just not look at it? I mean, how do you? It is hard. Buying and holding is doing nothing can be very difficult when you're sitting on massive profits.
Isn't that funny? Doing nothing is hard.
It is. It is. How do you do nothing on a huge winner like Google?
This is a lesson that I've learned the hard way again and again and again. Broadly speaking, my investing strategy, again, is to buy great companies and then hold them as long as they remain great. And if you look at the earnings reports that have coming out of Google's over that entire 13-year time period, I don't know how you don't come away and saying, this is a great company. This is a great company. This is a great company. I mean, like every single quarter, revenue up. They have new products that are out there. And despite the fact that they are spending gargantuan figures onto their other bets category, which, by the way, have yet to pay off.
We haven't seen what is an example of an other bet, by the way. I know they do some crazy shit, but we haven't seen anything, have we?
No, we haven't seen anything result in actual financial gains for the company. But Waymo is one and most likely to be. But if you dig through their Google Ventures list, there's tons of projects going on there. Remember Project Loon, which is like the balloons that would deliver internet to people in like remote places. A whole bunch of them have flamed out. But the thought is one of them will eventually work. But even if you consider that to be just a dumpster fire of burning capital, the core business is so amazing and so strong that it hasn't mattered. But for anything else, just YouTube alone is such an amazing side project for the company. It's like, I don't know, 10% of revenue, or Google Cloud also growing rapidly. But again, to answer your question, how do I continue holding even though I have these massive gains? The business continues to perform.
How long, like, let's just say Google has like a terrible quarter. Like, how many bad quarters would it have to have for you to change your mind?
So that would depend on how bad the quarter was. And when I'm reviewing quarterly results, the number one question I have in my mind is the thesis busted or is the thesis on track? And if they're going through a rough patch, do I think that rough patch is temporary or do I think that rough patch is permanent? So for me to fully abandon Google as an investment, I would have to believe that the core business was permanently under attack and permanently in a state of decline, in which case, and I saw no compelling second act that would kind of carry the torch forward for the company. And as amazing as YouTube is, if their core search business declined, it doesn't matter how much YouTube grows, like the core search business would just overwhelm the Google profits. So if I saw clear signs that their moat was weakening, that their financials were in a perpetual state of decline, I would say I'm out.
So Brian, do you have any names right now that you're looking at or recently added that are in that category of kind of a lower market cap that you think has the potential to grow? Like we've seen, you know, some of those names that you've been holding for 10 plus years?
There are several. I'm always on the search for businesses that are in that category. One company that's caught my eye recently is called SEMrush. Have you guys ever heard of SEMrush?
Yeah, it's like a SEO website.
I don't know this one.
SEM stands for search engine marketing, but it's a essentially all-encompassing website that marketers can use to help broadcast their message, and they can help you do paid advertising. They can help you make content that gets your message out there, and the long-term hope is that you use their tools to kind of dominate in the search engine marketing, so SEO And if you look at their numbers, it's a fabulous business, growing very quickly. It's profitable. It's free cash flow positive. It's founder led. The thing that blew me away was the dilution rate on the business. The dilution rate is essentially zero. They are very, very stingy with stock-based compensation, but that's a company that came public with very little fanfare. Like everything growth did very well for a couple of months and has not done well recently. But when I took that company through my checklist, I was very impressed with what I saw.
You know what I would say about this one? Unlike a lot of those growth names, it's not making a 52-week low. So that's something.
There you go.
Nice. There you go.
But this is like in my sweet spot. This is a market cap that's $2.3 billion. And it's like, if this thesis works out, if I'm right about it, could I see this being a $20 billion company one day? Yes. Yes, I could, if the thesis plays out. And the wonderful thing about investing is if I'm wrong about this, it becomes an irrelevant tax write-off. But if I'm right, you can multiply your money many, many times over.
Wow. Yeah, that's a great way to do it.
This is a fantastic conversation. Brian, can you give us one stock name that was a massive bust? You just screwed the pooch on it.
For me, my biggest dollar loss of all time came on Kinder Morgan. The ticker symbol there is KMI. On paper, that's a company that checked so many boxes for me, right? Founder-led, huge inside ownership, guaranteed take-or-pay contracts, good margins, good growth prospects, high dividend yields. Pick a metric, it looks good. So as you have on your chart there, I made this my number one holding, my number one position in 2014. So about August, roughly February to September of 2014. I made it my number one position by pure capital, and I also added in a bullish options position on top of that. So I used leverage right before that red line that you see right there. So what I essentially got wrong about this business is I thought the company's revenue was protected by those take-or-pay contracts. What I missed was that take-or-pay contracts only matter if the people on the other side of the contract can fulfill their obligation. And when energy prices were crashing, as they were in 2015 area, when you see that huge decline, their customers were hurting so badly that they couldn't fulfill their end of the bargain. And as you see, the stock has been a huge loser over the last couple of years. So that is one stock that taught me a lot of lessons. And man, did I get that one wrong.
Wow. That's a rough ride down right there.
Yeah, I joined Benzinga right about halfway through that free fall, and I remember thinking, people were talking at the time like, oh, like, is this the bottom? Is this the bottom? And it kept on going, and it kept on going, and yeah, that brings me back. Awesome. This was a fantastic conversation. And again, can we put the link up in the chat and on the screen for Brian's book?
Yep.
Amazon,
Barnes and Noble, every major bookseller, right?
Wherever you buy books, it should be available there. Yes.
Awesome. Brian Feroldi, it has been a pleasure to chat with you today.
Pleasure to speak with you.
Live.
Have a wonderful Friday, Spencer and Aaron.
Stay dry out there. Apparently, the rain's really coming down. So I hear.
Apparently, it's going to become ice a little later today. So I guess I'm going to go ice skating in my front yard.
Have fun with that.
Have fun with that.
Yeah, this was fun, Brian. We got to do it again. Again, books coming out April 5th. You can pre-order at this link up on the screen in the chat. Brian, have a great weekend.
Thanks so much, guys.
Alrighty. Hey, I just saw a comment in the chat. I'm going to have to go look into it on the news feed right now. But did the FBI really raid Andrew Leff's house?
I don't know.
Take his computers?
For insider trading? For what?
No. So recall that, like, is it the FBI or the DOJ? Somebody is cracking down on short sellers, specifically manipulative short sellers that manipulate stocks. We talked about this yesterday.
Wait, the FBI is investigating short sellers for what?
For manipulation, right? We talked about this yesterday. Like that's not a new headline that the FBI is. What's new is that they actually raided Andrew Leff's house apparently.
But is it what we were talking about yesterday in the sense that just putting out a short report is considered
that's what's not clear. That's what's not clear to me. Because like I'll say what I said yesterday. I really don't think in the grand scheme of things, like,
No, it's a free. You have freedom of speech. You should be able to like do your own investigation, research, put out a report.
right. If you're going to put out a report that has the quality enough to move a stock, and like, I think you should be able to profit off that. I don't know if that makes
Just like if I made a tweet thread that was just so compelling about a certain stock that it went completely viral and had 1 million likes, and everyone saw it and said, "Oh my God, yeah, Aaron, this guy is right about this stock," and went out and buy it.
Yeah.
And the stock went up. It's the same thing.
So it's unclear exactly what the scope of this investigation is, besides the fact that they are investigating. Yes, some short sellers are manipulative assholes who will just throw shit against the wall and see what sticks. But some of them expose like legitimate fraud. Like the Nikola report from Hindenburg was legitimate fraud. Legitimate fraud that got exposed. Right? Whitney Tilson was a famous short seller. He exposed like crazy shit at lumber liquidators. They were like, it was like poisonous ingredients or whatever. Right? You guys remember that? That was from like 8 years ago. Short sellers do good work. They expose fraud. And yeah, they profit off that. I think that's okay in the grand scheme of things. I think it's better than members of Congress trading stocks, members of the Fed. Members of the Fed? Are you kidding me? Well, Proton's asking the $1 million question, right? Is where do you draw the line? Where do you draw the line between like legitimate short report and just like pump and dump? It's a great, yeah, it's a great question. I don't know the answer to that. How do you draw a line between the good faith actors and the bad faith actors? Don't know. Oh shoot! Just realized, did I ever send Jesse the link for today? I'm doing it right. Yeah, I did. I emailed him last night. Okay, Jesse Kaylor will be on with us in 8 or so minutes. He'll be. I can't wait to ask Jesse how much he cried over the weekend. I'm sure he cried as a Bengals fan.
Happy tears.
Happy tears. So we're gonna do that at 12:30. Before we do that, though, should we do a name that chart segment?
Ooh, let's do it. I don't want to see it because I want to guess.
Well,
everyone.
Full disclosure, have not found a chart yet. So, oh wait, Aaron, guess who just emailed me?
Who?
Tim.
Oh, what did he say?
His wrong number. Oh man. Wait. I got it. I emailed Tim Quaz yesterday. I was like, Tim, you want to come on the show today?
His wrong number?
I have his wrong number apparently because I've been texting Tim Quast for weeks, and he never responds to my texts, and I didn't think anything of it until like yesterday when I thought, oh, maybe I like don't have his number correct. Yeah, I've texted him 5 times over the last month, and he's never responded to me. And I never took the hint that maybe I had the wrong number.
You just thought he was ghosting.
I just thought he was not responding to me. All right, I got to tell Tim we'll take a rain check. We'll catch Tim on Monday on pre-market prep. All right, so let's do a guess that chart right now. But I got to find the chart first. So while I find a chart, I don't know. Y'all can do something. Figure it out.
What should we do?
I don't know. I'll take. All
right, we'll take some tickers from the chat. I'll pull them up on my Benzinga Pro. We'll take a look at some tickers from the chat.
I have to. I'm gonna find the chart that had the clue is there's gonna be earnings next week. That's the clue. That's my only clue.
That's more than we usually get.
That's more than you usually get. We're gonna do stock reports next week. Speaking of reporting, if you guys have not been watching the earnings streams that we're doing after hours, we stream a couple conference calls every day. Check it out. There won't be any today, obviously, because it's a Friday. But we're gonna be doing Peloton next week. Peloton's on Tuesday. We've got Disney on Wednesday. Who else do we have next week? Twitter, I think, is next week as well. We're gonna do that one. Maybe we'll do like Rocket Mortgage. Aaron, maybe.
Sure.
I don't know. All right. This is not working for me. There we go. All right.
Ooh. Wait. Baba files for $1 billion additional. What?
Probably in Hong Kong. They probably filed for an offering in Hong Kong. I'm imagining that's what that says.
Yeah, maybe. Someone just asked my favorite question ever: is Nvidia a buy? I'm glad you asked. The real answer of this question depends on what's your time frame, right? Because if you're asking for like long term, like Brian Feroldi was just talking about buying stocks and holding them forever, then yes, I would say Nvidia is an easy buy. But if you're talking about just like a swing trade, I don't know. I honestly like. Who's to say what tech is going to do next week? If it's going to be, I think we're going to see some more chop for the next like month. I think it's just going to be chop, 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 up and down. So we're looking at a daily chart right here. If we start seeing Nvidia have more strength and start coming back toward those all-time highs, like if we clear this level right here, like a 280 level, then I think it's a safe play up to at least 310, 315 before it would maybe hit some resistance before it gets back to all-time highs. But yeah, I mean, I think eventually we will see the stock back in the 350 range. So if you're looking long-term, I'd say yes. If you're looking short-term, I'd say wait and see.
All right, I've got our chart for our Name That Chart segment. So I'm going to pull it up on the screen. There's going to be today's going to be an easier one. There's going to be a y-axis and an x-axis.
Wait, what's Rover doing? Rover
Wait.
Group. Yeah, Rover Group was one of those SPACs. All SPACs are down. I do remember that interview. That was a good interview with the Rover guy. Interesting idea for a company, but a lot of these SPACs have just gotten beaten up.
All right, I'm going to throw a chart up on the screen. I've got an x-axis and a y-axis, and we're going back. This is a daily chart. We're going back to the start of the pandemic with this one. That's how far back this chart goes. This goes back to March, or technically February, of 2020. Drop your guesses in the chat.
Am I allowed to guess?
First correct guess I see will win some Benzinga swag. Yeah, you're allowed to guess if you want.
Man, $36.
It is not Coinbase, Sal T. I don't even know what CC. That's probably the SPAC, CCC. Can we get some tunage up in here? Let's throw some background music up.
I'm going full screen on the chart.
Let's throw some background music up. Let's do some Oh, for crying out loud.
Did Shelly get it already?
For crying out loud. Yes.
She's not getting more swag.
Shelly, you can't get more swag. How much shit have we sent to you? Oh my gosh. She doesn't have it yet? Oh, that's not good.
Well, yeah.
Why not?
It's a complicated situation.
Can you enlighten us?
I don't know if she would want me to. She's got like a warehouse and then a different you got to ship it to a warehouse and the warehouse can ship it to.
All right.
It's a whole thing.
All right. Let's bring on our next guest here, Jesse Kaylor from Elite Trading, and we're gonna keep the tunes going, I think, because
yeah, it's Friday.
Why not? Just turn it down a little bit. Jesse, what's up, man?
Oh, just got this nice attire on for my friend Aaron Bry. Just wanted to make sure that Mr. Bree saw that I remembered our $10 bet. Didn't even have to cover the points because we won the game and we're going to the Super Bowl, baby. Let's go Bengals. Who dey?
Give me your Venmo and I'll do it live right now.
Jesse, how much did you cry?
I didn't cry, but I screamed a lot.
Okay.
And by the way, I was helping. I was trying to reverse jinx, which worked, saying the Bengals didn't have a chance because I wanted to see them win. I'm excited, and I'm rooting for them in the Super Bowl, Jesse. Because screw the Rams, they took the Rams from us in St. Louis. Screw Stan Kroenke. I'm going all Bengals for the Super Bowl. So if you'll allow me on the bandwagon,
I'll send you my Venmo in the private
chat. Perfect.
And also, something's wrong with that. It won't let me turn it over to the YouTube chat to see the chat like it normally does. So that was weird.
Oh, that's weird.
Huh. Yeah, let me try to fix
Last thing before we bring up the charts, Jesse, is did you see that video yesterday from the Inquirer of all those reactions?
I had not seen it.
Check it out. All those fan reactions to Sunday. Maybe
you're that'll be great to watch. I didn't think about that. I watched a lot of the ESPN reactions and the haters from the beginning of the season saying we were going like 2 and we're going to win 2 games, be last in the division. That was kind of great. And they showed Burrow highlights after that. But it was great. It was a fun game to watch. I'm excited for the Super Bowl. Did you see the odds? If you would have put $100 on the Bengals to win the Super Bowl, it would be worth $1,000 if they win at the beginning of the season, or $10. Sorry, it would be worth $1,000.
Why would anybody have done that?
But there are some diehard fans that are going to come out after if the Bengals do win. They're going to be showing some of those tickets out there.
Yeah.
What were the Bengals? They were 2-14 last year, right?
4. I think we had
4-12.
2-14 2 years ago.
Okay.
Yeah. Anyway, congratulations, man. You deserve it.
Yeah, you see the little shrine
Cincy
behind
Sports.
Me.
I think I Venmo'd you. I Venmo'd a Jesse Kaylor on Venmo.
Cincy Sports is rough. Congrats, man. And we're rooting for you.
I got the money. $10. Aaron Bry.
Let's go.
Yeah. Boom.
All right.
All right. He got
winner, chicken dinner.
Gentleman always pays his debts. Jesse, as far as the market goes, walk us through any trades you had this week?
Well, I lost a little bit of money this week trying to go against my rules and play the Facebook and earnings, and didn't call that the right direction, and then tried to play it yesterday, and it didn't move enough for my contracts to move, and I wasn't close enough to the end of money contracts. I was doing exactly what I tell people not to do, and lost a couple $100 on some Facebook options, but took a little stab at Twilio, TWLO. I like this one. They got the earnings coming up, and it's a trade that's going to be a high risk trade for me, but it's going to be one that either you go bust or make some big money. Because if you've looked at this stock before, the earnings here, if you see the earnings count, every time it's had earnings. In the last 6 earnings, there's been like a 50 to 75 point move in the upcoming 5 days, whether it's up or down. So this is kind of one of those plays where I know some people trade this way, where they'll buy, both directions and looking for a large move either way, up or down, to counteract the loss from the wrong position. And this will be one that I'm going to try to do that on. I'm going to wait till the end of the day today, see how it trades. My normal rule would be don't hold it over the weekend, but if the theta on the contracts that I want to choose if it's not too high, then I might go ahead and take a stab. But I may wait till Monday morning and see how it's doing then, and see how the market's doing, because I'd rather see it flush down leading into the earnings here. Today it's kind of, I think it's up 7%, 6%. So I'm not I probably won't mess with it today unless it flushes if the market kind of flushes down at the end of the day. But that's what I'm looking for. I'm looking for moments like this where you see it flush down, and it's immediately bought back up. Well, this last time it broke that big support that's right here around 280, and it's done nothing but go down now to 187. So you've lost $100 a share on this bad boy since it broke support. Your next area of support would be 129. So I was looking at maybe the 150 puts and the 220, 215-ish on the calls, and putting them out for a week after earnings.
Would you go like more equity on one side than the other, or do equal both sides?
If I'm more biased to the upside or the downside, then yeah, typically I'll buy like 4 contracts to the upside, 2 to the downside, and give myself a cushion. And I'm basically saying, okay, if I'm wrong, I've got 2 contracts to try to make some money back up out of that loss I had on the calls. And sometimes it depends on where the open interest is. So there's a time where I'll buy 2 levels. Let's say there's a lot of open interest at 205 and then 225. Well, I'll buy both of them and then possibly sell that out of the way out of the money contract if I'm right sooner, and then hold on to the one that's closer to the money and let that one ride, and then get out of those puts. And I'll have a stop loss on both directions at 50%. So if I'm right on the calls and they shoot up 15, 20 points, 25 points the next morning, then I'll have a 50% stop loss on my put contracts to try to minimize the loss on the opposite direction as well.
Yeah. I mean, honestly, I don't know. I think if I had to pick one way, I'd lean more bullish on this into earnings because
I think so too.
Twilio's in the same space as on the Google computing and Amazon web services. Like when we were looking at the chart the other day, I don't know if you were in the chat when we were doing this, but we were looking at the chart of the different. You had to take AWS out of the cloud providers, and Twilio was the second largest behind Amazon. The only thing that was problematic with it was the fact that Google's was growing at a faster pace than Twilio's. Or sorry, Microsoft was second, Twilio was third, then Google was below Twilio but catching up to it.
Yeah, and I mean this is a company where I think that they're going to continue to grow over the long term. I think right now they got smacked because of the whole sector being hit, but with the earnings reports coming out, do you think that it's going to affect? How do you think it'll affect them if they're just right in line? You know, if there's no beat or if they're right in line with their expectation of a loss. But I think they're quoting like a 90-cent per share loss is their estimate. If you want to look that up, Spencer, I don't know exactly what.
I just know that the other reports, especially on the cloud computing part for Google and for Amazon, were really strong. So I'd be surprised if Twilio's weren't. But yeah, I mean that's probably priced in at this point.
Wait, what day are we talking about here? Let's see.
The earnings are February 9th.
We're looking at the 9th. Yeah, they're. I mean, let's go further back though. So yeah, the estimate is for them to lose 21 cents per share.
21
cents. Let's just go back and look and just see how does that compare to historical stuff. So Twilio, if the estimates are correct, big if on that, but if they are, it would mean, okay, so nothing really alarming here. It's following the growth story where their revenue is increasing, but their losses are widening. That's what growth stocks do, generally speaking. So nothing really alarming about that. That's where the estimates have them pegged right now. Basically, pretty big year-over-year growth on the revenue front, pretty big year-over-year increase in net loss. So
the big story about this, why I wanted to bring it up too, is because I did hear Aaron talking about it. So that's what made me come back and look at it, because it was one of those ones that I won. So I won. This was a lottery. I put the roulette wheel on and won an earnings call on this one where I did the same thing on it. And I was told by a gentleman that this is back when I was actually in the car business, and I sold him a vehicle, and he said, "Hey, Twilio's earnings are tomorrow," and he just saw me sitting on my phone looking at stocks and happened to mention it. I said, "Okay, well, I'll buy a flyer on it," and I bought the 120 calls and woke up and they were at 180.
Well,
and it was like a 800% gain. And second, in the morning when the bell rang, I was like, okay, let me just see how this works. And I just held it for like 4 days. And if you see here, it just kept going and going and going. And then it ended up being like a 1,500% gain. I got out of it and made.
Shout out to that guy at the car dealership.
Yeah, I know. I have him in my phone as Mr. Twilio.
Yeah, I did. Yeah, I brought this stock up a couple of weeks ago because this is one of those ones that's just gotten so beaten up, but it's still a good company and it actually looks good. I like this one on the long term, but I mean, I'm with you, Jesse. I've gotten burned playing the options. I hit them. I hit one today with Clorox. I got burned the day before with Facebook. So I don't know. It's tough. For Twilio, I'm gonna wait till after the report to get into it probably. But I think I might get in on one call flyer with you because it does, and you almost see that little double bottom right there.
Yep. That's where you see my profit and loss. I would have a stop loss right here if you're buying shares and just say, you know what, give yourself like 10 points to the downside. You have a lot of upside here just in this small little range.
I like it. I think it's a good trade idea.
I got the girls home. It snowed at like some weird like ice pebble rain hail for like 12 inches of just ice.
How did we not get this weather? Everyone seems to have gotten this weather but us.
I don't know.
Yeah, there's zero. Nobody's went through the roads at all around here. The whole place.
Damn, the calls are expensive on Twilio.
They are. That's why I wanted to maybe wait till Monday. Do you guys hear the children in the background screaming?
Heck yeah, we do.
Hold on.
Sound like they're having a blast.
Man, we got some major. The dogs are barking right there. He's gonna go take care of his kids 1 second. Although honestly, I kind of like it. This is real life, man. This is what happens.
Oh man.
That's okay. That's right. That's okay. The kids can come on the stream. Kids can come on the stream, Jesse, if they want. Oh, he's... All right, he's on mute.
Oh, there they are.
Tell him to come on the stream. Yeah.
Come on. Say happy snow day.
Happy New Year!
Happy snow year. All right.
Happy New Year.
Snow year?
Yeah, happy snow
Hello.
Happy New Year!
Do you have any stock picks for us?
year. Hey,
Very
what
lovely
does
family.
green mean, Arden, on the stocks?
Up,
Nice. What does red mean?
down.
Yeah, high five. Let's go.
Nice.
She's
All right,
learning.
good She's learning. All right, get them early, man. Get them early.
Who's your favorite show? What's your favorite toy?
Ponies.
Ponies. All right, My Little Pony. We're long My Little Pony, everyone.
All right.
And
Okay.
my favorite
Who makes them?
show-
Probably Hasbro or
It-
something,
it-
or
it-
Mattel.
it-
one of
show
those.
is Abby and My Little Pony.
So we're long YouTube.
My name. Yep.
They only watch YouTube. They do not like regular TV. They like Disney
All right.
Plus.
Okay.
Google.
Okay.
Disney
So
Plus
the
with the
so
Mickey
the
Mouse.
goal is I'm not sure how old they are, but by the time they're like 12, we want them trading options, right?
Yeah.
Yes,
knowing
well,
where
at
Iron
least-
Condor-
Buying leaps with their birthday money,
Nice.
or
nice.
and selling some calls every week to make some lunch money, right? You can talk to him. He can hear you.
No, I'm gonna talk to them.
There's those two guys are
I
listening.
can
That's
hear you.
Spencer
but
and that's Aaron.
She can't hear us. Hello.
Hey, Aaron, that's a key.
Hey, how's it going?
What's up? What's your name?
Say winner, winner, chicken dinner.
Winner, chicken dinner. Why are you in here? Why are you
She watches the show with me and listens in, so she hears the Mitch intro. Winner, winner, chicken
Winner,
dinner.
winner,
She says it all the
chicken dinner.
time.
So,
Oh, nice.
Dustin.
Oh well, this is
All
the
right.
best interview ever, guys. This just shows you as real as it gets that stock traders have real lives. We're not sitting here with buying Lamborghinis and doing things like that. You know what I have is my Toyota and Acura and our F-150 that I cleaned off all, and Grandpa's car, cleaned off all of them today. And neither one had a cover or sit in a garage like some of these guys that we see out there. So if you're looking for a real trading show that just has real people, here you go. Here's one.
You know,
right
this
here.
would
I
never
gave you a
happen.
real
On
trade that
this
I'm
would
gonna
never
do.
happen on CNBC. This only happens here. Jesse, it's been a pleasure to chat, man. We'll talk to you again next week. Good luck to you.
I shorted
hope-
Snap, by the way. And the last one is I shorted Snap for a month out. I gave it a
Oh, wait a minute.
the $30 puts for a month out.
I'm an idiot. The game is not this weekend.
No, it's
I'm an
next
idiot.
weekend.
It's,
Next
all right,
week.
I'm dumb. I don't know why I thought it was. Yeah, okay,
This weekend
so-
is Poker Friday. I got to go play poker at a friend's house.
All right, all right,
Oh, good luck with
all
that.
right.
Yeah, Texas
So-
Hold'em.
Okay, so next time we speak to you, nothing will have changed. But the week after, maybe your life will have changed. We'll find out.
All right. Well,
Jesse Kaylor, Elite Trading. Link should be in the description. If it's not, we should put it there.
stay in the green, my friends.
All right, have a good one, Jesse.
All right, guys.
Have a good weekend, Jesse.
All right, that was fun. I enjoyed that. Also,
Yeah.
I'm in case that wasn't exposed just there. I'm really bad at talking to kids. Like, I do not know how to talk to children. I don't have kids. Maybe that's why, and I'm not a kid. So,
I have another stock that I'm ready to. It's officially being added
to the
to
long
my
term.
unofficial watch list.
Okay. Is it Leslie's Pool?
No, it's Warby Parker. They make glasses.
Ooh, I don't know about that. I honestly, general rule of thumb, I have them too. If this is a broad-based rule, if you've IPO'd in the last 2 years, hands off.
The only thing I like
Hands
about
off.
it is insider buys, multiple insider buys. CEO add in more shares. They've only reported earnings once as a public company and crushed it, and are set to again. And he's adding before the next earnings report, so I think they're going to be strong again. I think once you get two strong reports out there as a public company, then you start to get the interest of some more
I
investors.
don't know. I can't.
I'm saying I'm adding it to my watch
All
list, and we'll
right.
see after this next report. It's coming out in March, but they seem to have a good
All right.
recurring. revenue.
I can't get behind right now. These companies that IPO'd in the last, especially in the last year and a half,
But not every single one is going to be.
is going to be what? They're all down. Literally, like 90% of them are down. It is ridiculous. Yeah, Bros is the exception. Congrats if you picked the one out of the 50 or 100, whatever. No, it's not for me. It's on the watch list. So when do they report? Did you say
March?
Oh, we got time.
Let's see. Go to my calendar. Benzinga Pro. Oh no, February 18th.
We still got time. We got 2 weeks.
Unconfirmed.
All right. Hey, do we have trivia set up, producer Rohan? Is he even
set up?
Is he even here? Oh, you're here. I couldn't see you behind the TV. Trivia is set up.
It's set up.
All right. Should we roll? Should we try to recruit some people from the office to play some trivia with us? Michael Murray, you want to play some trivia? Michael Murray wants to play trivia. How do we do that right now?
Let Michael come up here.
Michael is eating. You want to just come on and eat lunch on the show and do this? All right.
Dude, DraftKings is down to like $20 a share.
We're going to talk about that with our next guest. You want to see where? Yeah, go take Aaron's seat.
Is that the pot pie from the cafeteria? Is it good?
All right, Michael Murray, everyone. By the way, the most valuable zinger. MVZ. He's the MVZ. He's got the deepest voice and the deepest V-neck.
Ooh.
What's deeper, your V or your voice? The question.
Up right now. I don't want to be inconsiderate of Spencer's stream is very legitimate and real.
Thank you.
I want to be respectful of that.
I appreciate that. All right, we got Rohan here. We got Michael. Do we got Aaron?
I mean, it's just the three of us.
The other Aaron? No, we don't. Okay, that's fine. What's up, Michael? How's your day going?
It's pretty good. I got this pot pie.
Is that good?
It's not bad.
All right.
It's a little bit trash, but I kind of expected that.
I can always rely on Michael for honest reviews of the cafeteria food here.
It's not awesome.
Okay.
It's okay.
Okay, feedback for the calf.
Mm-hmm. What are we looking at for stocks today? What's exciting?
Well, let's see. We looked at Amazon. Aaron was trying to talk me into Warby Parker just now, but I'm not about that life. What the hell? What are you doing, Rohan? What is that? That's producer Aaron. What's up, producer Aaron?
AT. Yeah, AT's on camera.
Yeah, AT's on camera. Anyway, there's the Benzinga office. You can see some of it right there. Random Ghost, if you're done with the market, come hang for trivia. It's Friday. We do this every Thursday usually, but it's Friday this week. And we're just hanging out and we're going to give away some free swag. Here's how it works. Rohan, you want to explain it?
Sure. All right, folks, if you haven't played trivia before, basically...
Sorry, I'm laughing on the chat.
Basically, it's a game where we have questions. Geography again today? Oh, did we do geography?
No. I thought the theme was TV. Enver.
I guess we got geography.
Wait,
it's geography.
That was the theme last week.
Hey, I mean,
wait, are these the same? Are these the same questions as last week?
Yet to be discovered.
Enver. Wait.
Enver's Rohan. No.
No.
All right. No, the theme, we did geography already. It was hard.
Wait, Enver, explain more. What's happening?
Fix this.
He
Somebody
just said no.
Somebody fix this. All right. In the meantime, Michael.
Hey, did you know I would actually be good at geography? You know why? I was homeschooled my whole life.
What was that like, being homeschooled?
It was kind of hard. I also had 8 brothers and sisters. We were all homeschooled at the same time.
Whoa.
So it wasn't easy, I'm not gonna lie. It was pretty crazy.
So you basically had your own school between the 8 of you.
Mm-hmm. It felt like growing up in an orphanage, except for my parents, obviously, you know? But there were just so many kids, you know, I felt like Oliver Twist.
Oh, man.
But I was the oldest, so I had 8 little brothers and sisters. I have a little sister now, she's 3.
Whoa.
Yeah.
So she was not in school.
She was not.
When you were in school.
No, she's in preschool now.
So, like, how did it work when you got, like, held back? Did that create, like, awkward tension? Whenever someone will get, like, held back? They don't ever get held back?
No, I had one little brother that got held back 3 times.
Whoa.
Yeah. He caught on a little slow.
Did that create for some awkward dinner discussions about, you know, why?
Yeah, my dad's like, look, Michael never did this. And I was like, well, don't put me in the spotlight.
Wait, move the mic closer. They're
That's
saying. Sorry, they're saying the mic is too far away.
Everybody always complains that I'm too close to the mic and breaking everyone's eardrums. And the second I move away, it's too hard to hear my voice.
Yeah, I don't.
While you're at it, can you scooch a little bit to your right?
Yeah, just scooch. There you go.
There's always so many requirements to be on the show. So difficult.
I know.
Are we doing trivia?
I don't know.
Okay, so I was gonna say, no, Enver just had the title wrong. We're good.
Okay, we're good. So what's the category today?
TV trivia.
TV trivia. All right, I'm ready for it.
Okay, so yeah, for TV trivia, I don't really know how many questions we have. I always forget this. My bad. But basically, it's 4 options for each question, a number corresponding with that option. You type it in the chat as fast as you can and get it right. As many as the person who wins gets the most right and does so the fastest. And what do you win, Spencer?
Some free swag.
Free swag,
From the swag store. By the way, you should check that out. Swag.benzinga.com. We got all the swag up there.
There's some cool stuff in there. I'm not gonna lie.
There's Christmas sweaters, if that's your thing. It's not mine, but to each their own.
All right. Well, I mean, if everyone's ready, all warmed up.
Yeah, let's go.
Stretch out those fingers. I got to pull up the stream so I can answer, but we can get
All
this
right,
started.
those are the answers right there on the screen, and now they're gone. So if you didn't write them down, it sucks.
All right, I'm going to get this started. Pull it up on the screen.
Have I ever told you, by the way, I think it's so weird when you say warm up your fingers. I
Well,
just think that's a really. Don't
would
you
you
think
want to
that's a weird
cool them down before playing trivia?
Well, no, I just.
So
Move
wait,
the mic closer.
wait. Did Rohan explain the rules? You have to put the number of the answer in the chat. You did. You said that.
Yeah.
Sorry, I was not listening.
It's just like, the warming up your fingers part. Whenever Rohan says that, I'm always like, it's kind of weird, right?
Christian says he actually got a delivery from us. Sweet, and it says formal wear. That's good. All right.
Whoa.
Question number 1.
Numero uno.
What year did the television company the BBC officially launch the channel BBC One? We're going across the pond for this one.
What age bracket did you make these questions for, Enver?
This is difficult. I'm gonna go with.
I've actually been to the BBC headquarters before. It was kind of cool, but I forgot this.
Wow. Rohan and I were born in 1998. This isn't even in our. Oh my god. This isn't even in our generation.
I'm going with number 1. I'm answering number 1 here. 1955.
I went number 2.
Yeah.
All right, dude, you guys need to stop with that. Come on, this is an adult show.
Hey, that was good, clean humor.
Oh my
funny.
goodness.
So that was pretty
All
interesting.
right, this one, the answers are pretty diverse. I'm seeing 1s, I'm seeing 2s, I'm seeing 3s. Not seeing any 4s. That would be weird. If
I'll
it
hit a
was-
4. I'll say 1921.
That's wrong. That's got that
Why do you think so?
because the TV was like barely invented then.
Oh.
1936. All right, congrats to everyone who got that one.
Okay.
Yeah.
I mean, I just have no frame of reference here. Very few of us, I think, have any. I don't even know if that was
All
the
right,
answer.
all right. Which of these television shows makes everyone look under their chair? Saturday Night Live, Oprah, Larry Rubert, I don't even know what that is, or Jimmy Fallon.
Didn't you just give the question? Didn't he give the question when he paused right after he said?
No, he doesn't know the answer. Wait, is this referring to like the studio audience?
Yeah.
Like, it's probably Oprah, right?
This is the one where you get a laptop and you get a laptop.
Right.
You
It's,
get a laptop.
right, exactly. That's what I was thinking. We all get cars.
Oprah. Yeah. Everybody gets a car. Everybody gets a Prius.
Right.
We're all winners.
Sammy is asking the right question. Sammy, I don't know why any of us are here, quite frankly.
That's just negative energy.
But hey, while you're here, you can win
Why-
some free stuff.
Look,
Why not be here?
that's
Sammy?
what I'm
That's
saying.
the real
A question like that is not pushing P. Okay. We're here to push P.
We are here to push only P.
Yeah, all right.
Yeah. No, it's a good song. Everyone should look it up.
Yeah, everyone guessed Oprah except for one person.
Oh, that's sad.
Nice. All right. So wait, this is question 3 of coming up of how many? Do we know? I guess we're gonna find out. Question 3 of 7. Do you want to read this one?
Yeah. In 2.5 Men, what is Alan Harper's son's name?
Oh my goodness. I've never seen that show, so I don't.
I have no
It's
clue.
a good show.
Yeah.
Wait, is Alan Harper? That's not Charlie Sheen, right? That's the other dude, right? The nerd.
John Cryer. Is that
Yes,
yeah.
the nerdy guy. Yeah.
Yeah. They're all saying it's 4. Oh, that's probably right.
Probably.
I'm just gonna go with the crowd
I
on
put
that one.
3 just for my boy James O'Connor. Yeah.
I'm gonna go with the
represent.
crowd on that one.
I'm gonna go with Jeremy. I'm gonna say 2.
Okay.
Just because.
Wisdom of the crowd. Someone in the chat asked a question about Amazon. We'll get back to the stock talk after our trivia segment. Don't worry.
Amazon interesting.
This is just a way for us to unwind on a Friday.
It is a good time to unwind. It's probably Jake. This is definitely Jake. I mean, it sounds like
our next guest who's already here. He's backstage. He also is convicted on number 4.
He's probably right. Who is our next guest? Can we get a preview?
Yeah, we're gonna talk sports betting with our next guest.
Sweet.
Jeffrey Kamys.
Nice.
He's got sports betting ETF. Yeah, it was Jake. All right.
Wisdom of the chat.
And now he works at State Farm. Fun fact. Question number 4. What was the first animated series made for a primetime network television? The Simpsons, The Flintstones, Scooby-Doo, or Felix the Cat? I'm going to guess The Simpsons.
I went Flintstones.
For
Flintstones,
prime time. The key word here is prime time. It's
Oh,
not
that's what is prime time?
like 7 to 9 p.m., right?
Whenever the most amount of people are watching.
Right. Like the Flintstones is Saturday morning cartoon, so is Scooby-Doo, so is Felix the Cat, I think. I think the key word here is prime time. It's got to be The Simpsons.
That's a great Enver. That's great, dude. Good clarifier.
Unless I'm wrong. I could be wrong. That's just what I'm guessing. I'm
gonna go Flintstones. I trust Rohan.
I haven't watched The Simpsons in like 15 years probably.
Great show though. Great
Isn't
show.
it like the longest running one?
Yeah, it's been on for like 30 years.
They also predicted the future many times.
Many times. That's true.
Amazing.
Yeah.
It's got to be the Flinties.
Wow, the chat's pretty split on this one.
Oh!
I was incorrect. It was the Flintstones.
What do we like to say, Rohan, when we get one right that we didn't think we were going to get right?
We probably shouldn't bring that one up.
Cool. Okay.
All right.
To those trivia fans out there, you know.
Everybody knows this one. Doesn't everybody know the answer to this
All
one?
right, what was the name of the main character in the Flash TV series? Oliver Queen, Bruce Wayne, Bart Allen. I think it's Bart, right? Bart sounds right.
I think it's Barry Allen.
Or
Dude,
Barry
if
Allen.
everybody in the chat doesn't get this one right, I'll be disappointed. Oh, somebody already said 3. It's not 3. I know. I thought this was geography.
Is TV.
This isn't
Geography was last week.
Aaron Thomas made me say it. I didn't mean that. That was Aaron. Yeah, it's Barry Allen.
Right. Yeah.
I think.
Yeah.
That show does slap though.
It is. It was a really good show. Yeah. That was all I was allowed to watch.
I mean, the
when I was
CGI was kind of like trash, but like
It was a good show though.
Wait, was this on like one of those like CW shows?
Yeah,
Oh.
Yeah. Very entertaining. Good show.
Yeah, I watched my. Oh,
Yeah.
almost everyone got it. Someone got fooled by the Bart Allen thing.
Who from Benzinga said 2?
That was Enver.
Enver.
Enver made these questions. His vote does not count. Oh man, what is the phrase on the UFO poster in Fox Mulder's office in X-Files? Also a show I've never seen before. Oh boy.
Yeah, I haven't seen this one.
Is X-Files that one that has that really good like soundtrack
Yes,
that like
yes.
everybody uses as their ringtone?
Yes.
Yeah.
Oh, it's literally on Spencer's soundboard somewhere.
Nice.
Oh wait, really?
Yeah.
Oh wait, it's right here. No, it won't play.
Why won't it play?
I don't know.
Every time I come on the show, the soundboard is broken.
I know. Something's always broken here.
I do sound like Jason. Ah, there it is.
Yeah, it's the one.
That's what it is. That's good.
All right.
We are not.
Yeah,
the truth is out there.
I'm gonna say we are not alone.
That's what I put.
Probably is. We are not alone. I'm gonna say the truth is out there.
I'm not looking at the private chat, Jeff. I'm afraid you know the answer, and I don't want to see it. So. Oh, I want to believe.
Wow.
Oh,
Interesting.
tough. That's a tough day for me in trivia.
I wouldn't have known.
I suggested this category too.
Yeah, I mean I feel like you're a journalist. I figured like
It doesn't mean anything.
okay, I guess it doesn't translate to TV, but you know.
All right. Every episode of Seinfeld contains an image or reference to what superhero? Wow.
Whoa.
That's a great question.
I'm watching Seinfeld right now, and I feel like
I've
What do you mean you're watching Seinfeld? You're at work.
No, well, not at this moment.
Oh, okay.
But I'm just like currently watching the show again.
Oh, it's a great show. I didn't know they did
What is
this.
the answer to this? I didn't know this. I've seen most of Seinfeld episodes. Not all, but most.
I bet it's got to be Superman.
The chat's all saying it's Superman.
Spider-Man?
The
I
chat's
put
all saying it's
Superman,
Superman.
It's got to be Superman for sure.
I didn't
Superman.
know this though. I was just watching Seinfeld the other night. I was watching the one where they go to India for their wedding.
Oh yeah, great episode.
The one where it's backwards.
Yeah,
They're all saying it's one, so I went with that.
It's gotta be
I didn't
Superman.
know this.
I know we have some Seinfeld watchers in our audience. They've got to know. It's got to be one.
All right. There's a consensus in the chat. Wisdom of the crowd.
Yeah, wisdom of the crowd. I need Tommy Cotter to give me an answer. Tommy Cotter knows. Yeah, there we go. Okay.
Wow.
And you guys do a decent Seinfeld impression.
Tommy Cotter, ladies and gents. Thank you, Thomas.
You learn something new every day. Enver says we should not be allowed to look at the chat because we can get the answers from the chat.
I guess that's fair.
Yeah, we should start hiding it if we're doing trivia. Aaron Bree, it's time for you to take your spot.
Alex Myers.
Going back to work.
All right.
Hey, Spencer,
Thanks a lot,
for
Michael.
hosting, man. I
All right.
appreciate you.
Alex Myers. This is what you do, Alex. You got to email us, all right? You got to email us at shows@benzinga.com. Put trivia winner or trivia in the subject so we know what you're talking about, and we will send you over some swag. There you go. Alex Myers, winner of today's trivia. Thank you for doing trivia, Rohan. I appreciate this. And Michael.
Oh yeah,
and Enver, obviously.
that was a fun time.
It's a fun time. All right. Let's do that. Let's take trivia off the screen here. Let's go back to the markets. I know, this is a fun show. We do stocks, we do trivia. We're going back to the stocks now. Actually, no, not just stocks. I much prefer, honestly, I would just rather have conversations about different industries, sectors, what is working, what's not working. Our next guest we're going to talk pretty broadly right now about sports betting. And what's going on there. It's been a pretty tough go of it for a lot of these publicly traded sports betting companies. But Jeffrey Kamys is the founder and the CIO and portfolio manager of the Inherent Wealth Fund. They have an ETF that tracks sports betting and gaming. The ticker is IBET, IBET. Let's give Jeff this special intro and get him on the show right now. Where's my special intro? There it is. Jeff, welcome to Benzinga Live. How are we doing?
Hey, how you doing? Thanks for having me.
How did you perform on that trivia just now?
Well, I knew the obvious. So we all know Seinfeld. I mean, our age group, I think your age group of the people on the show are probably a lot younger than I am. But we grew up, Seinfeld was like the staple on Thursdays. So everybody knew the Superman one.
Oh,
the Barry Allen one reminded me of the Leonardo movie, Catch Me If You Can, because he used to check in under Barry Allen as the Flash. That's how the Tom Hanks character nailed him.
Great
so
movie.
that one made me smile. And then I always think Simpsons, where I didn't think that was right. I thought that was a trick. And the question for Simpson is longest running TV show.
Yeah.
That I like the trivia.
Yeah, it was really good. All right, so you are the proprietor of the iBet ETF, which is the sports betting and gaming ETF. You've got, between 35 and 40 holdings across the sports betting space. What I want to know, Jeff, is we've been talking about that space for a while. Obviously, there are secular tailwinds in its favor, and yet it's been a pretty brutal year or so in the terms of the public markets.
Right.
So explain this to us.
Okay, so when we launched in November. We launched into the throes of Omicron, however you want to pronounce it. So that took those stocks out. And I think when you talk about this story, it's not about being in Vegas anymore. This is very digital and very local. You talk about New York that opened up gambling just last month.
Yeah.
They're going to almost do $1.5 billion in handles. I think the first 3 weeks it was over $1 billion in sports betting. And the real story about this, it has nothing to do with the customer acquisition costs are the issue right now, right? So if you're in New York and you go to like MGM or Caesars or one of these companies, if you deposit $3,000, they're going to match your $3,000, give you a bonus of $300 to grow their user base. And so these are being factored in, and those costs are really expensive. Now, the misinterpretation is when you see something like DraftKings. So DraftKings is one of, I think there's 70 stocks that could be in the ETF. DraftKings is they're spending a lot of money. I mean, you can't escape DraftKings. My brother, who doesn't bet on sports, doesn't like sports, knows DraftKings. it is in your face. They're spending a lot of money. I mean, they are going after territory right now, and it is investment cycles for a lot of these people. There's going to be a lot of mergers. There's going to be a lot of mergers and acquisitions. You see, like, I think just yesterday there was something with Boyd's, which is a really good stable stock with profit. And they just merged with DraftKings on a certain product. So there's a lot of merging going on. DraftKings bought Golden Nugget. You had MGM go after the Cosmopolitan because they wanted the skewed demographic, the younger demographic. So there's a lot of stuff happening in the space, but we're like kind of at, and I think the good correlation for this is probably where we were with cannabis 3 years ago. I think what you see is it's a wide open territory. It's like the Wild West. And they're fighting tough regulations. You have New York where they're going to pay 51% revenue tax. And that's, that was hard for DraftKings to make any money in New Hampshire with that. Now, what do I think? I think the most interesting thing about this space is that the correlation or the connection between a media company and betting. And I think if you have a media company, you'll eventually be in sports betting.
Such as a Barstool Penn situation.
Absolutely. But look at even bigger. Look at Fox. I mean, the Fox newscasters are regularly talking about sports betting. If you watch Colin Cowherd, who has a pretty good show, he talks about it. Skip and Shannon in the morning, they talk about betting, even though they bet Mountain Dew or whatever they bet as a joke. They talk about sports betting and gambling all the time. In the old days, you'd have like Al Michaels on doing Monday Night Football, and they would make some kind of cute reference like that mattered to somebody. But now they just say it. They're like, he got the over, and then
I can think of Brent Musburger doing a lot of that. Back in the day. So
you are looking live at
right, exactly. But so I guess like when you compare it to cannabis, though, I'm an investor in several of the largest U.S. cannabis MSOs, and as that's been painful for me. And so are you saying that this is going to end up being like a multi-year story? Because I think the assumption was, we're going to legalize new states left and right, and the market's going to start growing like gangbusters. This is a short-term story here, but you're saying it's not.
Well, no, I do think some of the customer acquisition. So we're still a baby. Like, I talk to a lot of the companies in the ETF, and they tell me what's going on. When I talk to the ones in Europe, they have several accounts. A user or a target person who will bet on sports will have maybe 4 and 5 accounts, meaning they'll be at MGM, Caesars, Wynn. And by the way, WynnBET just opened in New York too. I just wanted to announce that. But they'll have several accounts. Well, these users right now only have one account. Like, they'll start with MGM and they'll go. But as they grow and grow, but let me tell you about the story. Let me get back to the question. Sorry, I got tangential a little bit.
No, that's all right.
I think that what you're going to see is there are going to be states that are more friendly and less friendly. I think New York is a huge opportunity. I also think when you get bigger companies involved in this. So let me talk about something that I think is really interesting, because I heard a question when I was listening. So something happened this year. I think when you get larger companies in, they're going to be able to break through some of these tax problems. And let me bring it up. So we already know Disney, and we have a really small holding at Disney in our ETF because Disney owns ESPN, of course. And ESPN is starting to get a little more hip to sports betting. They have a show on where they talk about wagering, and they will have some type of interactive play. When you
it's
start getting,
it's about 2% of the fund. I'm just to tell people. Yeah.
When Disney gets more involved, and companies that are really large that can bring a lot of weight in their markets, I think they're going to clean up things a little bit. And let me talk about another company that may get involved in this space. They're not involved. It would be a story I'm talking about, but. DirecTV, which had the biggest thing DirecTV ever did was get the NFL package. And a lot of this gambling is on the NFL. We're going to see huge numbers, probably the largest numbers ever in the Super Bowl upcoming. So when DirecTV, and this is kind of a big thing, somebody asked about Amazon. So DirecTV now is losing the NFL Sunday ticket. There's 2 companies that are bidding for it because it's going to be something like a $3 to $5 billion price tag to own it. Amazon and Apple. Now, whoever gets that, you're telling me that they're not going to try to integrate some type of sports betting with that? So
No,
I'm just saying is that when you get these larger players in there, they're going to start being able to cut through this in a little bit in a better way to make it more cost effective.
So if for an Amazon or an Apple, hypothetically, that would mean partnering with someone. So unless, I mean, they could theoretically do their own thing, but that seems like a giant pain in the butt. So they would partner up with the sports book. And so for that lucky sports book, then great. But for the rest of them, it's sort of, you're out of luck.
Yeah, well, they're all trying to grow and grab the piece of pie. I mean, it is out there, and it's out. Like I say, I think it very much resembles like the Wild West. The one thing that they're not facing that cannabis is I think they are getting rid of. I think it is eating up the bookie business. The individual bookie business is going away. Yeah. I also saw an interesting company that just started where instead of betting and giving up 10% or the vigorish that you give up to the house, they're actually allowing partners to pure match to bet each other. And they're only taking 5% of the cut to do that. So they'll match you. Like, let's say you're going to bet with your friend and you'd say, hey, is there somebody out there who wants a $10 wager on the Niners game last weekend or something? Then you can pure match. So I just think the industry is going through kind of a revolution. We're going more digital, which means you're going to get more efficiencies, but it is going to be costly at the beginning. But I think what's going to be really interesting is we're going into some really good earnings in the next 2 or 3 weeks. So you have large companies like MGM coming out with earnings. We had some good earnings from Las Vegas Sands. You have Red Rock Resorts. There's a lot of smaller companies that are doing actually pretty well in the industry coming up and beating on prior earnings. So I think we're seeing it.
And this is exactly why I think, frankly, ETFs is the way to go for getting exposure here, because it's so early. We don't know. There's going to be consolidation. There's who's going to win. Impossible to say, frankly. Now your ETF, though, I bet, is actively managed, which means you're picking the stocks in it and you're deciding the weighting, right?
That's correct.
So what's behind that methodology?
Mostly, I would say, okay, so I come from, in my background, and I probably didn't give you my bio, but I used to run a fantasy sports company when I was many years ago. I ran a company called Dodger Stats Fantasy Sports. I know a lot of players in this industry. And what really my methodology is directly speaking and interviewing these companies. And so I want to know as much as I can about these companies, and where indexes will go based on some parameters. My ability to be able to be more flexible and be a visionary in what's happening in some of these sectors gives me more freedom to get a new flyer into my group. And I also I'd like to have something like a Boyd's in my ETF, which may not be as sexy to other ETFs, so, and I also don't have to take some of the China stocks that really got hammered because we had all the Macau issues. I took Wynn out. Because I thought there was a story about Wynn where they were going to sell their sports betting department in New York. They were going to sell that for like $300 million and take a huge loss on it. I don't know what's going to happen, but I saw too much danger with Wynn right now, and so we took that out. Now that probably is in the other ETFs that are in the space, but I just think it gives me flexibility to really research this and be what an active manager should be, which is the most knowledgeable person in the space.
So are you actively adding? Are you constantly adding and deleting, or do you stick to like a rebalancing schedule or what?
Well, I think I think it's based on, it's news driven, right? So I'm looking for some kind of an occurrence to happen. One of the companies that I really like that actually makes money, and so look what's going on in the market in general right now, and we could talk a little bit about other stocks if you want to at some point. But in the markets in general right now, people are looking for value-oriented plays, right? So if you go back to like the Ben Graham model or what Buffett would say, you're looking for companies that actually have low price earnings ratio. And if you look at a company like a Bally's, those are kind of interesting to me. Bally's just made a big pitch to build, $100 million casino in downtown Chicago. That kind of thing is exciting to me. That's a place. I grew up in Chicago. The idea of having a Chicago casino on the waterfront, to me, it's amazing. I mean, one of the best convention cities in the United States, having a casino on the waterfront is exciting to me. So we added and I upped my position in Bally's because I think that's a progressive move. And I also changed, we got rid of some of the growthier positions when we first opened, and we added to some of the ones that have a little more value. I look at something like Golden Nugget. What's going on in the space right now is I can tell you there's every one of these positions, or a lot of them, are shorted. There's a lot of shorts in the space because you see, you'll definitely see the slingshot effect on these stocks because they'll be down 4 or 5% one day, they'll be up 7, 8% the next day, and that's happening a lot. And so when they get any kind of good, occurrence, they get slingshot back up. And I know Jim Chanos, who's a famed shorter, has a big short in DraftKings. I don't know how long he's going to stay in it. I think that thing's down more than 2/3. I mean, to me, I'm not saying it's a value because its PE is still negative like 5. But I'm saying if you're going to be an investor and you're going to look at it long term, getting into one of those now is not a terrible idea.
Yeah, I'm looking at the holdings in this fund, and there are some names that are definitely off the beaten path a little bit. Names like Evolution. I mean, Flutter is a big name. Not many people, if you're not up in the space, you don't know about Flutter. Names that, I'll be honest, I'm not familiar with. Names like Camby and Tab Corp. I don't know them as either of them, frankly.
Well, a lot of these are traded. So when I mentioned, when I talked to a company called Gambling.com, they're not in the portfolio right now, but they essentially are a referral business. And they were kind of explaining their company and their product. And the great thing about this is they'll readily they'll tell me all about, every time I talk to someone from one of these companies, I learn 10 new things about the industry. So Gambling.com is a referral source for other gambling platforms. And they were telling me about a lot of these. We're very much in our infancy in gambling, but in Europe, it's been, for many long times, especially like in Sweden and different places like that, they've had gambling legalized for a long time. So these companies, a lot of these are from, traded on like the Oslo Stock Exchange and all over the world. So I think that it's basically our knowledge is limited because we're not seeing them on our stock tickers when we watch CNBC and they don't talk about these companies.
Exactly. I'm wondering, Jeffrey, you mentioned your background. You ran a fantasy sports website.
Yeah.
What similarities are there between fantasy sports and investing? Because Aaron and I both do both of those things as well.
Well, okay. So what I would do, I was a big kind of like a Bill James guy, and I'm sure, and like sabermetrics guy, and I was big on analytics. So I would write. I think that picking stocks is so similar to picking players. They go in different cycles, especially in baseball. Baseball says, really, if you do something 500 times, there's going to be a set group of things that happens. A guy's going to fall into these categories. And then you have the outlier years. So I really think when you analyze players, it's the same as analyzing stocks. You're looking for catalysts. Did the guy get in great shape in the offseason? Is he in a contract year? Is he the year of 27, like in baseball we used to talk about? So you're looking for catalysts like that in stocks, right? So I want to buy something like Bally's right now because I'm thinking, if Bally's breaks that Chicago deal and that starts happening, that's going to be big growth opportunity for Bally's. So I think when you analyze players, it's the same way. And I still have, I play in fantasy football leagues, just like I'm sure many of your listeners and yourselves. Mm-hmm. And I think it's fun. I think that I think it's the same audience is really what it is. The corollary is that it's the same audience, especially in sports betting. Somebody who's playing DraftKings for the fantasy side of it, where you're putting teams together, is probably the same guy, if he can do it in his state, who's going to maybe make a $5 parlay wager or something.
Do you actively sports bet, or are you just?
I do. I love to. My wagers are mostly football. I love to bet on football. I think it was a crazy year for sports. I don't know about yourselves, how you did. I think it was a really tough year. Last year and this year, because of so many people out with COVID, it was just like you didn't know who you were getting. And sometimes you'd be like, well, they have 10 guys out. They're not going to play well. And it didn't matter. They still did well.
Okay, so what I want to know from you is, how many different accounts do you have?
I have 3.
Oh, me too. How many do you have, Aaron?
I just have one. I just have my DraftKings.
Really?
Yeah.
Is that for fantasy or for straight up betting?
For betting. Yeah, we're in Michigan. It's legal up here. I actually was very early in on the DraftKings FanDuel daily fantasy. I mean, I remember, making accounts on I wasn't even 18 at the time, but my dad thought it was cool. We were like signing up under his name and we were doing all of them. But then it came out over time, like how it's just like 1% of people like keep winning on the from like the different algorithms they're running and stuff. So I find the daily fantasy stuff like very hard to compete in.
But do you have loyalty to any? I don't know. You didn't say what accounts you have, but like I've got a MGM, I've got a DraftKings, and I've got a FanDuel Sportsbook. I have no loyalty to any of them, frankly. That's just what I have.
Well, I'm in California, so I can't really have as many as you can because we don't have it. But I do have some loyalty to MGM because like I'm going to be in Vegas. We're gonna have a little party in Vegas for the Super Bowl, and I usually stay with MGM, so I have some loyalty because it does count. And they're giving inducements, right? They're tracking loyalty programs, so you get upgraded. Vegas is very crowded for the Super Bowl this year, I would tell you. So, they are going to be packed because as I try to get rooms for my two boys, they're going to go. I had to put them in like, they barely got in is what I'm saying. So they're packed for the Super Bowl this year.
They're on, what's it called? Fairmont.
Yeah. Sorry about I hope you're not a Lions fan, by the way.
No, actually neither of us are Lions. Well, I've adopted the Lions, but neither of us are from here originally. But I did adopt the Lions as my lovable losers team. I feel bad for them, and I root for them.
I would agree with that. I'm rooting for the Bengals in the Super Bowl because I'm from St. Louis originally, so I don't root for the Rams.
So I have a regular. So I'm up a little bit this year, so I'm going to let it ride, and I don't want to take. I'm a Packers fan, so we're going to probably be going through grief after Rodgers goes, but we're kind of sick of being held hostage too at the same time. But I think I'm definitely. I'm going to do a little podcast about it. I think I'm going to go with the Bengals just as a fan in this one because there's something I don't like about, the Rams. I don't know what it is.
Maybe because they left the Midwest.
Can't quite.
You're a Chicago guy. I'm a St. Louis guy. We can look out for each other.
There
you go. I'll protect you.
On it. Yeah. But my point in asking you about the accounts though is really like I would imagine most people are like me where they just don't have any loyalty to any one sports book, right?
They are
one brand.
They are. They are, and they're going to go for, like I said, if you're like in New York, you're going to go in if you have like 10 grand that you want to put in accounts. You're going to go and get as many matches as you can.
Right. And what I've noticed too is it's not only like first time customer bonuses being offered. I mean, there are always different promotions. I know I use the DraftKings one primarily because it's like the only one I have on my phone, and I'm just lazy about downloading a new one. But DraftKings will offer like, bet a $20 same game parlay, get your money back if it loses, and that's not for first time users. It's just for any user. And then
sucks for you.
Right,
I do a bunch of the fantasy contests in DraftKings, and I use my fantasy background, and I've thought about creating an algo to try to find those players. It's very tough to win in those contests when you're going against like 10,000 guys. I think my best finish was like top 300, and
they're tough.
Yeah, I mean, it's tough. And so I'll get my money back and sometimes double my wager. You'll be like on a $20 contest, I know of 140 sometimes. But it's really hard to pick the guy who's going to be the outlier because everyone's going to pick like if you're going to do the one for like the upcoming Super Bowl, you'd have a bunch of guys who had Burrow and a bunch of guys who had Stafford. And then you'd have to figure out if you nail that one guy, but who's the outlier? You're going to have to nail one outlier that nobody grabbed. And if you look at Super Bowls, there's always an outlier player who has like a huge game.
Yep.
What do they still have the head-to-head like peer-to-peer ones on there on DraftKings?
I don't know. I don't know if they're going to have that for this one. You mean head-to-head like individual or head-to-head for like just,
like they used to have an option they used to have an option on the daily fantasy where instead of being in a pool with 10,000 people, it was just you against someone else, and it was like $20 to win $20, and it was your lineup against their lineup.
I never did that. I always do the classic games because I'm greedy like everybody else. So I'm looking for the big win. So I'm looking for the guy who's got the $1 million next to his name or the 50,000. My son just called me this morning and he goes, Dad, I got an 18 parlay. I'm like, you're not going to win an 18 parlay. He's got a $5 18 parlay on the NBA. Yeah, he went to school in Arizona, so he can bet there. And by the way, like I think the other thing that's really cool is you're seeing all these new integrations in stadiums. Arizona just announced one.
Yeah.
You have them everywhere. I mean, it's just going to be ubiquitous, I guess, is a big word for saying it's going to be everywhere.
All right, Jeffrey Kamys is the proprietor of the iBet ETF. IBET. He's the founder and the CIO of Inherent Wealth Fund. Jeffrey, it has been a pleasure to chat with you today. Obviously, you're long-term bullish on the space, but challenges remain. We will be tracking the progress going forward, and we'd love to have you back on again soon. Have a good rest of your day.
Love it. Thanks, guys. Thanks for having me. Have a great day.
Have a great weekend.
All righty, it is 1:24, so we've gotten almost all the things we wanted to get done today. We've got one last guest, Rick Decosta, on. He'll come on in about 5 or so minutes. We're going to talk trading psychology with Rick. But we did our trivia. We did our name that chart. We gave away the swag. Well, we didn't actually give it away yet, but I did see Anthony. Was it Anthony?
Give it away. No.
So Anthony was the winner. He emailed us already. So it was Alex. Sorry, Alex. I see your email. Aaron Bree will respond, right?
I can do that.
Well, not right now. I meant, but I meant in general. Yeah. Okay. So let's just take stock of things. How are we doing out there? I haven't looked at the overall market. This is what happens: is I go on this show and I just lose track of what's actually happening out there. So I'm gonna pull up my watch list in Benzinga Pro. I'm going to look at what do we got out there today? Okay. All right. Amazon is holding, which is what I'm really watching today, right? I just want to see Amazon hold. You want to see Amazon hold most of its gains. It's not going to hold all the gains, obviously. Oh, actually, I stand corrected on that fact. It's over the course of this show, it's rebounded nicely. This is what happens. I don't look at charts for a couple hours, and I lose all sense of time and space. So let's just pull up our SPY real fast. SPY doing the same thing. Nice day for the SPY. All right. This is solid. I like this. Let's just bring up the...
I did get into a new trade, which I kind of broke one of my rules, speaking of trading psychology.
What was the trade?
I bought some
WM
weekly Apple calls that expire next Friday.
Oh.
But the rule I broke is that I'm going to hold the contracts over the weekend. I don't know. Dude, I'm so... You know what we haven't talked about in 2 weeks?
No.
COVID. You know why?
No.
It's done. Omicron came and passed. Cases been absolutely...
I don't feel comfortable saying it's done. But it's definitely not as big a deal as
so this was kind of predicted by a lot of people with Omicron, that when it's more contagious but less severe, that it would spread quicker, and then just as quickly as we saw the cases spike up, it would spike down. But the other aspect of it is from an administrative standpoint, the Biden and the Democrats know right now that the only chance they have in hell in the midterm elections is to get rid of the COVID restrictions, try to make everyone happy. So they've already kind of said they're done doing anything on that front.
Well, that's all fine and dandy, but that has no bearing on the virus spreading, right? The virus is still.
But I think from a stock market perspective, all bullish news on the COVID front.
Yeah. But again, COVID is still a thing. We're going to get more waves and more variants.
The only spin zone would be that, okay, now that COVID's not a thing anymore, maybe they're going to be increasing rates more or at a higher rate than expected.
No, I don't know if they're factoring that in. I was talking to my parents. I got COVID. You didn't get COVID yet, did you?
Not that I know of.
I got COVID. I was talking to my parents the other week, and I was like, Mom, you guys should just get it. Just get COVID. Just get it over with, right? They're vaccinated, they're boosted. Just get it. Get it over with. And because my parents are very cautious people. I'm not as cautious like them. I feel like it's better if everyone just got it and then provide that you're vaccinated and all that, but just get it over with. It's kind of where I'm at. BCF saying no COVID talk, guys. We haven't talked about COVID in a while. Aaron just said that.
That's what I'm saying. That's the reason we haven't been talking about it. Is because cases are disappearing.
Yeah. I haven't looked at the COVID case tracker. That's not true. I looked at it a month ago, but before that, I haven't looked at it in a long time. So,
yeah. See, Denmark said it's over. It's officially over.
Denmark said it's over. Scott Gottlieb said it was over on CNBC 3 months ago, before Omicron. So,
what does Scott know?
That was weird. Anyway, let's bring on our guest here. Let's talk trading. Let's talk trading psychology. New guest. It's New Guest Friday. We've had 3 new guests on the show today. I like new guests. New blood It's more fun that way. Rick Decosta is the president of FitTraders.com. Stands for Financially Independent Traders, I think. Let's find out. Let's give Rick again special intro of the day. Rick Decosta, how are we doing?
Hey, what's up, guys?
Was I correct? Was I correct that FIT stands for Financially Independent Traders?
That's right, Financially Independent Traders. So FITraders.com.
FI Traders.
Yeah, came up with the name about 3 years ago. It originally started as Rick's Trades. Everyone used to just follow me on Instagram. And then we gravitated to more of a professional approach, and we took on the name FIT. We technically just go by FIT, but if you look at our website, you'll see Financially Independent Traders. Thanks for having me on, guys.
All right, we got some of your friends in the chat. Rick said Ted says Rick is the best trader I've ever seen. How long have you been trading?
I started trading in 2009, so good time to start trading, right? Right after
Great
the
time.
financial crisis. I didn't know what I was doing up until probably about 2013. I went full-time. I became a full-time trader in 2017. I used to work for the Bank of Montreal, BMO, here in Canada.
Nice.
I learned some good experience there from some brokers. So I learned the tricks of the trade and was fortunate enough to be a part of the cannabis boom. So we had a cannabis boom here in Canada. So ran that cycle up. And at that time, I decided to go full-time. So I went full-time in 2017, started my YouTube channel in 2018. That was like a supply and demand issue because all my friends and family texting me, asking me all these questions about the cannabis stocks at that time. So I was like, I gotta open something where everybody could see. So we started on Instagram. We gravitated towards YouTube. So YouTube's been open since 2018. I've been helping new traders, sophisticated traders, doesn't matter your skill level, since 2018 on YouTube. And then we grew a community, and here we are today on Benzinga Live.
Here you are. You guys have taken over our chat right now. I love it. How would you describe, broadly speaking, your strategy, your approach?
I'm more of a short-term momentum trader. I have, everybody has their own system, right? My system is really based off of using Fibonacci's, using volume to really dictate the trades, and using the ADMA as a momentum indicator. Anybody who's been watching me for a long time knows I always focus on the ADMA. Typically, if a chart is riding the ADMA, and it's one of my names, I'm going to be on it. And one of the other components I use is the Kumo cloud. So I like using the Kumo cloud as well. But basically, short-term momentum trader. I'm not a bottom ticker. I'm not a top fisher. You see the bull in the background over here. I'm 99% going to be in bull trades. But I teach traders of all sorts of different strategies. And the number one thing I teach them is you got to be you. You got to be the trader you want to be. So if you're a bottom fisher, if you're a Bollinger Band trader, if you're a breakout trader, whatever it is, I have a couple of go-to trades that I use, like a volume climax trade, trading off of the golden pocket, if you understand Fibonacci golden pocket zones. So I have a couple of go-to trades that I really teach people. But at the end of the day, everyone's got to find their own style. People watch my videos, they learn from my style, but they don't necessarily take that exact system and make it their own, because you can't. You got to be you. But what they do get value from me is helping them with the trading psychology. That's the main thing I typically focus on when I'm teaching new traders, because anybody could teach you how to read a chart. Anybody could teach you, call out a trade. Like, I don't run a call out service. I run a true trading community, and we have.
So how did you come to find that? Oh, like I like the Fibonacci's, or I like looking at certain indicators. Was it just a trial error thing, or?
Yeah, it's just a time tested and true system. So back in 2017, I didn't know about Fibonacci's. That wasn't something I was using at that time. But I ran into a couple of traders along my journey, and you learn, right? You learn from other people. You learn from the people around you. If you see somebody that is showing you some success and they have a system, you could kind of just take away a little tidbit from it. How could I incorporate that into my system? So if the basis of Fibonacci's is like Elliott wave, a lot of traders are going to gravitate towards Elliott wave. I don't go towards Elliott wave. I use the components of the Fibonacci's because I'm not trying to predict too many cycles in the market in advance. I'm trying to predict the next 1 week, the next couple of days. How could I extract money from here? And then if right, we're going to use the momentum on our side. So for me, it was just watching the golden pocket over and over hit. This is where the algos are buying. It's a typical zone where you're going to see market reactions, and then incorporate it into my system.
So let's talk about psychology. And if you wanted to share your screen, you by all means, feel free to. You can just go ahead and bring it up
Sure.
on the screen right now. But like, let's talk about like, what are some of the biggest, like the most common mistakes, psychological mistakes that you see not necessarily new, any trader make?
Well, here's the thing. Most people get into trading because someone told them to buy something, or they saw something on Twitter, or, it's crypto, it's GameStop, whatever it is.
Yeah.
So when when somebody comes into the market for the first time, the worst thing that could happen to them is to be successful right away because they don't really know why they were successful. So if you made a lot of money in crypto before we started consolidating in 2017, if you made a lot of money recently and you just got into the market now, if you made money in GameStop back in Wall Street Bets last, 2020 now or 2021? I can't remember when that exactly exploded. Yeah. Here's the thing. That's the worst thing that can happen to you. Just like when you start off trading options, I basically trade weekly options. That's my go-to. I'm a conservative trader, but I get aggressive when the time is right, and I use that with weekly options. It's just like when you get options for the first time. If you're very successful in the beginning, it's going to hurt you in the long run. My focus on teaching people trading psychology is based off of my experiences, my losses. Lessons not learned in blood are easily forgotten. And I teach people this so that, hey, you got into the market, great. You made $1 million and now you're depressed because it's dropped to 200,000. Well, if you didn't sell at 100, you didn't sell at 500, you didn't sell at $1 million, when were you going to sell? You were always going to go through this market cycle. You were always going to blow up. So what happens is once they blow up, then they try to learn. Right? Then they try to learn. Then they try to learn the charts. And then you think, hey, I've learned the charts. Now I figured this out. I would have sold at that point at that time. But then you realize the charts is just another fraction of trading. The main thing, the system, doesn't matter what it is. Of course, you have to perfect your system. But the main thing is your own psychology. If you don't have your hope, fear, greed, and regret in check, if you don't understand what those 4 things and how they apply to the chart that you're watching. Can you guys see my chart right now?
Yeah, I'm going to bring it up right now. There it is.
Yeah, so I'm going to use, to circle back on that, hope, fear, greed, and regret. What I teach traders is you have to reflect on that every single day on every trade you put on. Because when you don't reflect on it, you don't learn from the emotional experience of the trade that you actually put on. And that's the true execution, is how in control are you of your emotions during the trade. The trade might continue to run on you. The trade might continue to dump on you. How did you handle it? When you reflect, I mean, it's not just all you think about at the end of the day. You write it down. We have in our community, we have a reflection thread at the end of the day, every day. And people talk about their experience, what they did, the mistakes that they made, what went well. That way, the next time the situation arises, you have that experience and you learn from the experiences. And then I talk about the psychology in the chart, because every pattern in the market, I mainly focus on patterns. Every pattern in the market has a psychology to it. So why is this triangle going to break out? Why is this cup and handle going to play out? Why is it going to bounce off of the golden pocket? A volume climax when a chart is collapsing, when a chart is mooning, there's going to be a volume climax. And why is it going to react this way? So once you understand those things, and you're in control, because you understand your own emotions, how you're going to handle this. People don't like buying fear. This morning, if we're looking in NQ, for example, we were dropping hard off of job summaries, right? And people were scared. People were worried. But all we were doing in NQ, look at the shape in here, sharp. Oh, this is collapsing. The market's going to crash. Here we go. All we were doing in NQ, we were just coming back to this zone that we were continuously loading up off. Here we go. Support acted as resistance, 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 support. Once we broke, we back tested it, and then NQ took off. Guess where it wants to back test to? It wants to back test to the golden pocket perfectly and right in the zone. So while everybody's fearful, if you're in control and you understand there's no reason to be scared here, you're prepared to be a buyer in the zone. And that's what I teach people. At the end of the day, you might not want to be a buyer in here. You might want to just see it happen and be, okay, I'm comfortable now. Now I could get into some trades a little bit later on. This is exactly what we just did together, getting into Tesla, because we just got into Tesla weekly options for next week because we felt comfortable based off of what we saw in here.
Yeah, can you walk us through that trade real fast?
Yeah, so Tesla. So what I've been looking at in Tesla here is, again, going back to the golden pocket in here. So as we had a big run up, okay, as we had this big run up off of our lows, we had an exceptional run in here, and you could see where the market came back. And we would expect that the market would come back into this golden pocket zone. It's not there because the log chart was on. Taking the log chart off, you can see right in here, is exactly, let's move this out of the way, where we hit was 2 to T, the bottom of the golden pocket. Okay. So this is the buy zone. So if you're watching my videos, if you understand that, you understand this is a buy zone. Since we bought up off of that zone, we've now established ourselves in a little bit of a falling channel. Let's go back to this falling channel in here, which is being thrown off right now because I moved that line right in here. So if you could see here, what's been happening in Tesla is we started at our top, we rejected it in here, we rejected it again. Let's zoom in a little bit in here. You can see we're constantly rejecting this zone in here. We tried to go for a breakout the other day, then the market was pulling us down, and then today we got the breakout. So there's a couple of reasons to take this trade in here. One, jobs numbers are behind us. Amazon's lifted the market. You're starting to feel a little bit confident. You see NASDAQ back test that zone, starting to break. Also looking at the fact that ES is coming back up over the 4492, those key gamma levels in there. And in here, you could also see there's an inverse head and shoulders. What I really like about this is you have multiple reversal signals. One, breaking the upper trend line. Two, you got the inverse head and shoulders. Three, it was showing strength while the market was showing a little bit of weakness this morning. And also, if you take this all off and you consider where we are, and if we're going to retrace from if we're going to bounce off of the golden pocket, I think we will retrace back up to the golden pocket. So that gives you a lot of probability for a great risk to reward trade. So we can bring this chart, maybe we hit the 0.5. We rejected this resistance over here at 987, but the gold pocket's up at 1049, 1063. So if you're buying 1,000 calls for next week that are trading at $5, and we get up into that 1,050 range, if the market participates, we have a good futures market on Sunday, we get follow through next week, that's 1,000% return. So the risk to reward is so favorable. Of course, we need to break 947, but we'll adjust based off of how the market reacts.
What was the strike price on those Tesla options?
$5.20. So they're probably up 30-40% right now for next week, 1,000 calls. And if you look at the market in here, and Tesla's like one of my babies, like our community, our chat room, we're not a penny stock chat room. We don't focus on any penny stocks at all. We focus on the big board. We only focus on the big board. Like names that'll be relative to the big board. Your previous guest was talking about DraftKings. It's like a sore spot in my heart, DraftKings, because that was my biggest loss of 2020. I don't like that stock at all. But we'll focus on, what's Kathy have, what's in ARK and the big board, right? So, and also just circling back here on the Tesla trade, if you think about the potential of a squeeze back up, right, that this would be the bottom, this was a load, right? Everyone got fearful in here. We hold the potential, again, just going back to the risk to reward, we're setting up a huge inverse head and shoulders in here. This is a great opportunity in the market, right? Great opportunity. So to go back, it's really about understanding the psychology of the pattern and how you could execute. Everyone was fearful today. Premiums dropped on Tesla. That's a huge opportunity. It's a huge opportunity. I'd be remiss if I didn't talk a little bit about the community. I got a partner, Sherv, man. So Sherv takes care of all of our fundamental, our macroeconomic viewpoints. He's really knowledgeable in understanding the vol and the gamma. So it's not just about trading off of patterns. It's not just about trading off of Fibonacci's. We have a big focus on what's happening in the macro environment. We've got a lot of great traders. It's more of a boutique community. We have 300 members, so we're not like trying to drive 1,000. I don't go and do advertising. I don't go on Twitter and post every single thing that we called correctly. We're just not into that. People that join our community are the right people.
I'm curious. So Rick, so you said you're mostly a long trader. You've been in this long enough to have seen a number of market cycles. I mean, last decade was more or less this prolonged bull market, but there were pockets of weakness in there, and there's of course 2020, but there was 2018, there's 2016, 2015, 2013, I think. So like, how do you approach a market that is not just going straight up, like a market that is, or straight down, a market that's going sideways, for instance?
Yeah, absolutely. So I've been on YouTube since 2018. So what happened in 2018? we had the Fed crash, right? The Fed rates. So we dropped 20% up until that Christmas. So I had to deal with teaching people how to trade within that moment. We also had the Corona crash. Well, actually, prior to that, we had the cannabis stock crash. I mean, cannabis stocks, like if you look at CGC, was once trading at $76, or Tilray was once trading at $300, and now they're trading in the single digits. So I had to deal with that. I had to deal with the Fed crash. I had to deal with the Corona crash, and then the essential ARK bubble crash of 2021. What I teach people is not that you need to follow me. I'm not going short here. I'm not playing short. I'm looking for the next bull opportunity. But yes, when we are in a consolidation market or in a correction market, the bull window of opportunity is very small because we're trying to play counter trend. So when you're trying to play counter trend, you have to change your style if you're a bull, because you're always trying to find the bottom, because the market's always trying to find its bottom. So when you're playing counter trend, your window of opportunity is so much smaller. So I like to look for a couple of things that are going to give me a signal. One, it's a short-term scalp play off of a golden pocket. Two, it's a volume climax. There's a volume climax opportunity. But all of that stuff doesn't matter. I help teach bears too how to let their trades develop. For me, what matters is protecting my higher low. So the reason why I'm able to be a sustainable full-time trader is because I have the psychology set that I will always protect my higher low. So not the chart's higher low, my personal higher low in my trading account. So if I just made 10,000, if I just made 100,000, whatever it is, there's a certain amount I'm willing to give back when I'm participating in the market. And if I reach that point, I need to hands off and only take A+ setups.
I want to talk about exits. Entries are easy or easier. Exits are very difficult, right? Knowing when to, especially knowing when to cut a loser. So, like, how do you do that?
Cut a loser is very simple. You should have an invalidation zone of the chart. So if you're like, for myself, I don't trade off of fundamentals of a company. But I'm not going to trade companies that I don't understand. I'm going to trade companies that I'm very aware of them. And this is why we focus on the big board. But I'm not going to be looking at balance sheets. I'm not going to be looking at year-over-year statements. I'm going to be looking, okay, is the company sound? What is the chart pattern? The fundamentals will tell you what stocks to buy, but the charts are going to tell you when to buy and when to sell. So when you're making your entry, when you're buying, you should have an invalidation zone. Why are you buying in here? And this is why we use charts. We use charts to give us a little bit of a edge in the system. They don't always work. They're going to be invalidated often. Oh, it looked good yesterday. Well, it doesn't look good today. Here's what happened in the overnight market. That's what happens. But you should have an invalidation zone. So if you think about, I'm going to buy NQ today off of this golden pocket. If it falls below the golden pocket, should you still be in? Well, your reason for entering was there. Now your exit. Right? So that's your reason for exiting on a loss. Your exit reason for the upside is you have to look for the sell targets, whether it's a Fibonacci, whether it's an upper Bollinger Band, whether it's a price level, a supply zone, a resistance zone, whether the chart runs too hot and you get a volume climax. I like to use short-term momentum indicators to tell me that these are sell zones, that potentially get ready for it to be a sell zone, like a 8 exponential moving average. The further you get away from it, it's like getting too far away from the upper Bollinger Band. You start to get prepared that I'm going to need to take off some profits in here. So you get prepared for it, but then you look for confluence. Is there a zone in here? Is there resistance coming up? Is there a Fibonacci? What's the rationale? Versus if you're just going to buy and hold, here's what's going to happen. You're going to make money, and most of the time you're going to be giving it back. And what does that circle back to? Your emotions being regretful that you gave too much back. Why are you regretful that you gave too much back? Because you were greedy. The greed emotion took over while you were in the chart. So I have this thing called the 40 to 60 scale. You guys know RSI 30 to 70. Anything below 30, you're oversold. Anything above 70, you're overbought. I try to teach people that when a chart is in that 40 to 60 scale, it's very healthy, right? It's very healthy. If it's trending up, it goes over 60, it gets really hot, it's over 70. But your emotions, that 40 to 60 scale, when you're in that euphoric moment, catch yourself in that euphoric moment. Your emotions are over to 60. You're getting the 70, 80. What happens when a chart gets in the 70, 80? It comes back down. It corrects, unless it's GameStop, it goes 99 or whatever. But you understand there's going to be a correction. So your emotions are about to have a correction. So you need to be aware before you let your emotions down.
Emotional correction. That's a good one. Emotional correction. Never heard it like that before.
It's we all go through it. Highs
Rick,
and lows.
Do you ever roll options over?
I'll roll an option over if I feel the trade's going to work out, but the time is wrong. That's all I'm going to do. So if I think about listen, this chart looks perfect. It's all set up. I'm in the trade and I'm down, 10, 15, 20% in the option. I feel like nothing's invalidated in here, but I don't want to take that risk for it. It's expiring next week. I might roll it out to a week after. I might change a different strike. So for me, rolling it out, all I'm doing is taking the money that's left in the value of the trade and transferring it into a new strike at a new date. So if I put 10,000 and now there's 8,000 left in it, okay, I'm at risk here. If this doesn't work out next week, 8,000 is going to quickly become 3 or 4. Let me take the 8 and give myself more time. That's the only way I would do it.
Yeah, I was just curious because I recently, I like to trade weekly options too, and I had never rolled any options over, but I recently had for the first time a couple weeks ago in a very similar situation where I thought, I still think this is going to hit my strike price. I just need one extra week, so I had to put down, I think a couple extra, few $100 of capital to roll it out, but it ended up being worth it in the long run.
Yeah. Well, I was hearing you, Aaron, talk about that you're breaking your rules that because you're going to swing the Apple options over the weekend. That's the thrill and the anxiety of weekly options, right? Because if you get that gap up on Monday, you're having a great payday to start the week. Like I said, I'm very cautious in terms of the amount of trades I'm going to take, where I'm going to take the trades. But when I'm ready to go, if the market tells us it's time to go, then I'm going to be all over these weekly options. And hence, I will be swinging these Tesla weeklies unless something drastic happens at the end of the day. And Q's coming up to the resistance zone, so we'll see what happens there. But, that's where the big money is, right? That's where the big money is.
Yeah, you got to holding an option contract over the weekend is certainly risky, but, in this market, in this industry, you got to take those risks sometimes. And when I do that, I know it's a much smaller position for me. It's like, if we get that gap up and Apple's higher, then my trade works out great. If it's not and my trade goes essentially down to zero, okay, it was like a small little bet for me, right? It's all about that risk reward that you were talking about, Rick.
Yeah, especially if you're going into the weekend and you've already got some profits, you could, start scaling out some contracts to make sure that, you're not overexposing yourself. Intraday, you could really take advantage of weekly options, right? Because you're going to have that complete control chart. You want to stop out, place your stop level, whatever it is. Over the weekend, the biggest wins I've ever had in my life are weekly options. And of course, it comes with swinging. Last year, just before the end of the year, I hit 6,000% on Tesla options. I've hit Tesla options over 3,000%, 4 times, Tilray over 3,000%, GameStop over 3,000%. But those are all weekly options where I needed to swing overnight for it to work out. I've also taken hundreds of other trades that didn't work, right? You had to immediately take it off. But big wins, if you know how to play them right.
What's on your short list of best stocks to trade options with? Like if I said you could only pick 3 stocks to trade options on for the rest of your life, what three stocks would those be?
Well, Tesla's number one. There's nothing that compares to Tesla, right? And Tesla is a rewarding stock. It's rewarding. Even if you're a bear, there's been some great opportunities. Long run, it's not been good for a bear, but Tesla's the number one option stock that's out there. There's nothing that compares. But number 2, only when the time is right is Amazon. But the time hasn't been right for about 2 years because when Amazon options move, they absolutely explode. The other one I would say that's at the top of the list would be NVDA. NVDA has been such a rewarding stock. I think it's undercovered the way people talk about it when they don't talk about the big market.
I agree.
Market names. NVDA is up there, and it's constantly paying. AMD's been good as well, so we like to gravitate towards those names. Right now I think the next big one, although the option chain is terrible, is Google because Google's going to do the split 20-1 come June or July. Some of the biggest trades I've ever hit in my life were the splits. Was Apple split, Tesla split, who was the NVDA split. Google's going to have a huge run into that split. When's it going to start?
It already had a big run. But yeah, I don't even actually. You said it was June, July. I don't know when that split. I didn't bother to look when the split.
July 15th.
July 15th.
Yeah,
that's a relevant piece of information.
We've got a lot of time, but that's going to be a huge trade.
I love the NVIDIA call. I've been quoted on this show as saying that's like my favorite all-time or my favorite long-term stock at least, and I agree that it's undercovered. Like I don't know how it's not being grouped with the rest of the FANG stocks at this point, but
well, it's going to replace Facebook pretty soon.
Hey,
Meta. After those earnings.
Wait, Rick, question from the chat here: How far on the weeklies? How far out do you go? How far out of the money do you go?
Well, it depends on the target. So for this case, I did like 1,000 on Tesla, which is pretty far. You know, it's over a 10% move, but the implied volatility was low, so the premiums were going to move pretty quick. I'm not sure what they're trading at right now, but generally, I will be within a week or two. So I'm not going to go too far out. I don't like to hold 3-4 weeks because when I take a trade, my trading style, BU, master your strategy. My trading style is I like to be right pretty early. So I don't want to sit and think, oh, maybe I'm going to be right. I like to be, I'll take less trades, but when I believe in the setup and I believe in what the market's doing, I'm going to go 1 or 2 weeks out. I do have a little bit of a sizable account, so I will go common shares and a bunch of stuff as well. But when I go options, I want to go 1 or 2 weeks out. And the strike will depend on what's the premium right now, where do I think the chart potentially could go, what's the pattern I'm watching, what's the target, where's the golden pocket, where's the fib extension. All these things are going to factor in to how far out I'm going to go. Of course, the further you go out, like when I hit 6,000, 3,000%, those trades, you have to be so far out of the money in a low IV environment and then catch the explosion, right? Further out the money, less capital you put in, the greater percentage reward. But when you go that far out the money with a low IV, you can't really commit too much capital. If you go near the money, at the money, you can enhance the capital. You can put in a bigger size. When you're going too far out the money, right, you're taking on a lot of risk. The chart could even move if it's not impulsive. You're still not going to you're not going to be profitable off of it. So that's the risk. You have to really understand options. People you see options, you see people's returns on options, you immediately want to get into it. I recommend you start with a very small account. And ideally, you lose. Ideally, you lose in the beginning because you really need to understand the power.
I was just thinking about that the other day, my first option trade ever, thinking back to it. And it's like, God, I did so well right when I first started. I thought it was going to be that easy, and I never really learned a strategy. And then over time, it's caused me to get better once you start losing,
Yeah. Most traders or so-called traders, they're not successful trading common shares. They see the results in options and they think that's going to be their saving grace. It's not. It's going to make it worse, especially if you're successful in the beginning, because you're just going to blow up eventually. You have to really understand, if you're trying to learn options, paper trade it or start with a very small account. You got a 6-figure account, start with $3,000. Don't even get to the 5-figure. Start very small to understand. Watch the option change. Watch how a monthly moves versus a weekly. It's so much to learn. It's so much to understand. But that's where you can make some big bucks if you get it right.
All right. This has been a great conversation. I've very much enjoyed talking to Rick Decosta from Financially Independent Traders. FITraders.com is the website. Rick, thanks for coming on Benzinga Live today. I appreciate it. Have a great rest of your day. Have a great weekend, and talk to you.
Yeah, thanks, guys. Thanks for having us. Cheers.
All right. So, Aaron, at the behest of Luke Jacoby, and then I have to be honest, part of me feels kind of dumb here, but I assumed earlier that someone else was going to do this. So we talked about Andrew Left. Someone dropped this in the chat that Andrew Left had his computers seized by the FBI today as part of this probe into short selling. So I did reach out to Andrew to try and get him on if not this show, a show. And if that happens, I will let you know. But it's not looking positive right now.
If I were him, I wouldn't want to go.
I imagine he has lawyers telling him not to speak publicly, which is totally fine.
Speaking of,
well, not rest in peace, Citron. First of all, he doesn't even short anymore.
Yeah, they went long only.
He's got a long only fund now.
Can we pull up Benzinga Pro real quick?
We can always pull up Benzinga Pro right now.
I've got a stock that spiked in the last 5 minutes.
Is it Clorox?
No.
Oh, what is it?
DUEC? MP Meta Platforms. FB.
What? Wait, I'm confused. Facebook?
Yeah.
Yeah. Hey, what's that about?
I don't know.
You guys see that too? What's that about? On volume too.
Woo!
What is going on here? We got news. News me.
Jim Habash, you've held NVIDIA for a decade. Kudos to you. What a great decade to hold a stock.
News me. Does anyone know why Facebook is spiking?
Facebook. Maybe people thought it got too cheap.
I just want to say I've been on record as not liking the Facebook stock for like over probably two years at this point.
I know. I've always given the long-term case for on the Oculus AR/VR side of it, but I think hearing with the way the leadership of Facebook talks about that side, where they're like, yeah, it's kind of a bet. Like we don't know what's going to happen. I've become less bullish on that side of the business.
Yeah. Wait. Oh, sorry, Jim. I thought you were giving us news, but he was just saying he owned them both for 2 years. Okay, 6 years. We got to hop because the roadmap is going live right now. I'm sorry, not roadmap. Today's Friday.
Moon or bust?
Moon or bust. It's a moon or bust kind of a day today.
Boon or must?
Logan and Ryan, the crypto boys. That's what we call them here.
Oh, Twilio's also up. No, I didn't get into the trade yet.
Sucks to
Shoot.
suck.
I said I liked it into earnings.
Crypto boys, Logan and Ryan talking about what's hot in crypto land. Coming up next on Benzinga. We'll catch you guys next week. I'll catch you guys in an hour and a half for the At the Close show with Joel. Everyone, smash that like button for us. If you don't check out Benzinga Pro, what the hell are you even doing with your life? Check it out. It's free for 2 weeks. pro.benzinga.com. Let's end the show today with a commercial for Benzinga Pro.
Did you know nearly all stock price changes of 10% or more result from a single news headline? That's right. News headlines have a unique ability to drive stock prices up or down. These news catalysts create trading opportunities every day. All you need is a little help to reach out and take them. And if you're looking to grow your portfolio, it doesn't matter if your investment budget is small or big. An easy-to-read stream of news headlines will increase your opportunities to profit from price changes in the stock market, consolidate a knowledge-based investment strategy, and grow your portfolio. All you need is Benzinga Pro and its powerful news alerts, price tracking, and portfolio monitoring to make a positive change in your trading performance. We've already helped thousands of retail traders across the world, and they could not be happier. Increase your market knowledge, boost your exposure to big movers, and make informed trades before major price changes. The opportunities are all around you. Subscribe now, and we'll skyrocket your portfolio to